So, ladies and gentlemen, a very, very warm welcome to all of you to this very special third edition of Directors Dialogue Series. My name is Ritika Jhanti Jagtiani, and on behalf of Institute of Directors India, I am pleased and honored to welcome all of you, our very, very distinguished and esteemed IOD members, our associates, and our global family to this very special edition of Directors Dialogue Series. Now, I'm told that other than India, we have the IOD family from USA, UK, and many parts of Europe. We have people from countries like Germany, France, Romania, Netherlands, also as far as Canada, South Africa, and Qatar, Oman, UAE, Maldives, Malaysia. People from all these countries are joining us. So thank you so much for joining for this very, very special webinar in such good strength today. Talking a little bit more about this initiative, these virtual seminars that you are attending, these are actually specially curated initiatives that Institute of Directors India came up, especially during the pandemic time. And the idea was to focus on the core sectors of Indian economy and discuss the challenges and opportunities faced by them and the role that board of directors can play in them. So, ladies and gentlemen, the special focus of today's Dialogue Series edition is going to be financial services and the insurance sector. And the theme for today's Dialogue Series has been preparing the financial services sector for future opportunities and challenges ahead. And we have a great lineup of speakers for you to talk more on this. But before we do that, I would really like to extend our gratitude to Ministry of Finance, Department of Public Asset Management, and Ministry of Commerce and Industry, Government of India for the kind support and inspiration. And also a big thank you to all our partners without whose overwhelming support this webinar would not have been possible. Let me start thanking our principal partners, that's Life Insurance Corporation of India, LIC, and PolicyBazaar.com. Then our platinum partners, Agriculture Insurance Company of India Limited, SBI Life Insurance Company Limited. Our gold partners, IFCO Tokyo General Insurance Company Limited, HDFC Ergo General Insurance Company, Odisha Mining Corporation, and Union Bank of India. And also our silver partners, Chola Mandalam MS General Insurance Company Limited, Universal Sompo General Insurance Company Limited, ICICI Lombard General Insurance Company, Star Health and Allied Insurance Company Limited, ECGC Limited, and Spices Board of India. So thank you to all our partners for extending their support and in this endeavor of IOD India. Talking a little bit more about this, now steering our organizations towards a more sustainable future has become even more challenging for a board of directors because of this COVID-19 pandemic era. Now, today, we have a great lineup of speakers that include Government of India, some very, very senior policymakers, secretaries, and eminent leaders who will be sharing their wisdom, their insight, and their strategic perspectives and share with us how they think board of directors can actually take forward their organization towards a more sustainable future. But before I open this session by inviting the first speaker to give the welcome remarks, I would like to share with all of you who've joined us till now just some very brief videos of our partners, without whom, of course, this webinar would not have been possible.
मेरे पास तो कई लाइव्स हैं, मुझे लाइफ इंश्योरेंस की क्या जरूरत, लेकिन आपके पास तो एक ही लाइफ है। अपनी फैमिली को सिक्योर कीजिए LIC के साथ। LIC, जिंदगी के साथ भी, जिंदगी के बाद भी।
सर, आपका बिल
5 लाख 10 लाख का हेल्थ इंश्योरेंस है मेरा। बाइफरकेशन होगा।
15 लाख?
नहीं मेरा नहीं होगा। लास्ट थर्ड क्लास हॉस्पिटल का 5 स्टार बिल।
सर आप कैश पेमेंट करेंगे या कार्ड से?
EMI।
अब हॉस्पिटल बिल के आगे हेल्थ इंश्योरेंस कम नहीं पड़ेगा। policybazaar.com पे कराओ 1 करोड़ का हेल्थ इंश्योरेंस बहुत ही कम कीमत पर।
फसल बीमा से अब सुरक्षित आत्मनिर्भर बन जाए किसान।
माटी से है उठी पुकार, अब तकदीरें बदलेंगी।
रुकेंगे न हौसले कल की अविश्वास से, अब तय किया है हमने।
नया दौर खुशहाली का ले आएंगे इस जग में AIC के संग।
मौसम की मार अब नहीं करेगी तंग, बुलंद हौसलों की मिट्टी के संग। कठिनाइयों से न डरे अब ये मन, दिख रहा है नया भरोसा।
हर खेत रोशन हो मेरा,
हवाओं के रुख से साहिल बदल रहे हैं।
पूरे देश में अब किसान
फसल बीमा करा रहे हैं।
AIC के संग, मौसम की मार अब नहीं करेगी तंग, नुकसान की होगी पूरी भरपाई।
AIC किसान का हमराही।
एग्रीकल्चर इंश्योरेंस कंपनी ऑफ इंडिया लिमिटेड, संपन्न भारत की पहचान, बीमित फसल खुशहाल किसान।
पापा योगा टाइम।
आज बच्चे भी इम्यूनिटी स्पेशलिस्ट बन गए हैं, विटामिन ABCD के एक्सपर्ट्स बन गए हैं।
पापा डन।
क्योंकि ये सब जानते हैं कि जब हेल्थ की इम्यूनिटी बढ़ती है तो हम सुरक्षित रहते हैं। इसी तरह हमारी फाइनेंशियल इम्यूनिटी यानी फाइनेंशियल सुरक्षा बढ़ने से हमारे अपने सुरक्षित रहते हैं।
SBI लाइफ का पूर्ण सुरक्षा प्लान जो दे लाइफ कवर और 36 क्रिटिकल इलनेस की सुरक्षा और बनाए रखे बैलेंस बढ़ती उम्र के साथ।
आप टेंशन न लो जी, गड्डी डेंट प्रूफ है।
ये गोला तो ठीक है, लेकिन ये हाथ गोला गिरेगा तो?
गुड जोक।
ये पिन गोला गिरेगा तो? ये विनाश गोला गिरेगा तो?
गिरना तो नहीं चाहिए।
नमस्कार भाऊ। नमस्कार। अभी कार लेते समय इतने सवाल पूछते हो, कार का इंश्योरेंस लेते टाइम पूछता है कितने कैशलेस गैरेजेस है, ओवरनाइट रिपेयर सर्विस है, क्लेम सेटलमेंट रेट क्या है, पूछता है। अगर पूछोगे तो मिलेगा सही जवाब HDFC को। अभी कार इंश्योरेंस का हो सवाल तो HDFC को है सही जवाब।
एक बार आके देख लो, कहीं मैंने कोई गड़बड़ तो नहीं कर दी।
सिर्फ मेरा नाम क्यों?
अरे जिसने घर खरीदा है उसी का नाम होना चाहिए ना।
और फ्रेंड्स क्या कहेंगे?
कहेंगे कि काश अपनी बीवी भी ऐसी होती।
पिछले 100 सालों से ऐसी हर अच्छी शुरुआत का साथ दे रहे हैं हम, यूनियन बैंक ऑफ इंडिया।
हेलो अतुल।
हाय माँ, यहाँ रात हो रही है माँ।
सॉरी बेटा, बहुत याद आ रही थी। ओके बाय 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 बाय।
माय पेरेंट्स, मेरे लिए ना कॉलेज चुना ना सब्जेक्ट्स, बट उनका प्लान था बहुत ही स्पेशल, जिससे बन गया मेरा फ्यूचर।
LIC का न्यू चिल्ड्रंस मनी बैक प्लान जो आपके बच्चों का फ्यूचर करे प्रोटेक्ट हर जरूरी मोड़ पर।
इट्स अ फ्यूचर बिल्डिंग प्लान।
In May 2000, the world saw two giants coming together. IFCO Limited, world's largest processed fertilizer cooperative, and Tokyo Marine Holdings, a global insurance provider, came together to form a joint venture company in India to provide general insurance to all. An MOU between the two great companies was signed. On 4th December 2000, the company received the IRDAI license and the seed sworn germinated into IFCO Tokyo General Insurance Company Limited. We started our operations with mission to provide insurance to individuals, corporates, cooperative, multinationals and others who were uninsured. And the rest is history.
Friends, good morning, good afternoon, or good evening, in whichever continent you are. On behalf of Institute of India, Institute of Directors India, I welcome you all to today's global webinar on preparing the financial services sector for future, boards, opportunities, and challenges. Today's theme is both topical and a great opportunity for the future boards to take advantage of the momentous changes announced in India's latest budget by the Finance Minister of India. It has thrown up great opportunities and challenges for boards. India's latest budget mentions health crisis as a looming challenge, something which is closely related to the insurance sector and risk management. According to the budget, the 6 pillars on which the financial health of the country is dependent, the foremost pillars are identified as health and well-being and financial capital and infrastructure growth. The boards of the future will have to align their priorities accordingly so as to integrate better with the growth of the economy and the market and take advantage of government policies announced recently. First, the health and well-being budget has been hiked by as much as 137% compared to last year, which will open up bigger opportunities for the insurance industry. The announcement of the Development Finance Institution to be formed will be a new challenge for the financial sector in India, as also the national monetization pipeline for infrastructure assets. For the insurance sector, the changes in the Insurance Act of 1938, increasing the maximum permitted foreign holding from 49 to 74%, will surely be welcomed, discussed and deliberated in detail later just now. It is also a great opportunity for our foreign friends and delegates who are logged in today and their governments. The regulated gold exchange proposed will be another opportunity for the boards to take advantage of this innovation in the financial sector and to further secure their assets, including fixed assets. The most welcome opportunity for the future boards would be to look forward to amalgamation of the various statutes in the financial sector as announced. The SEBI Act of 1992, the Depositories Act of 1996, the Securities Contract Regulation Act of 1956, and the Government Securities Act of 2007, along with Single Securities Markets Code. The boards and financial sector have every reason to chair the rationalization of multiple acts on the subject covering the financial services sector in India. This initiative, we are confident, will be received well in all common law countries, for which the India's Companies Act of 213 can serve as a model. The decriminalization of the Companies Act 2013 will further motivate our investors, including foreign investors, in both the ease of doing business and carry on business with ease. To further consolidate the financial capacity of India's public sector banks, further recapitalization of as much as 20,000 crore is proposed in the budget, so that the companies and organizations can take advantage of the easing of credit flow. India is further enhancing the allocation to the Rural Infrastructure Development Fund from 30,000 to 40,000 crore, which will further open up opportunities for expansion of the financial and insurance industries in the rural sector, particularly the agriculture sector and the agriculture insurance sector. On behalf of IOD India, I especially welcome the several dozen foreign experts and participants and company directors who have joined us today from all over the world. For our foreign delegates who have logged in today, the budget has good news that an international financial services sector will be formed in India as an umbrella organization, which will be of interest to the foreign countries with whom we are having financial and commercial relations. We will be announcing the list of the countries logged in today from all the continents in a short while. Some of them have already been listed by the anchor. Friends, insurance is basically a civil contract, and India's independent judiciary, I can assure our foreign friends and potential investors and joint venture friends, will ensure the sanctity of contracts and their effective enforcement. We are particularly fortunate today that we have amongst us very distinguished speakers who are some of the top policy advisors of India, all of whom have spared so much of their valuable time to share with us their great insights and experience in official policy making. The anchor has already announced, but I hereby extend a special welcome to these listed Indian policy advisors and policymakers. That is Dr. Anup Vadhavan of the IAS. He's Secretary Commerce of India. Shri Debashish Panda, IAS, Secretary Financial Services of India, and Shri Tuhin Kant Pandey, IAS, Secretary Department of Investment and Public Asset Management, Ministry of Finance. We, on behalf of IOD India, welcome you all specially. Further, I have great pleasure once again in thanking our over-generous partners today who are with us. The principal partners, Life Insurance Corporation of India and PolicyBazaar.com, a star performer today, not to be confused with Star Insurance, but a star performer in its own right. I also thank our various other partners, that is Platinum Partners, Agriculture Insurance Company of India, and SBI Life Insurance Company. Gold Partners, IFCO Tokyo, General Insurance Company, the HDFC Ergo General Insurance Company, the Odisha Mining Corporation, and the Union Bank of India, a leader in financial institutions. I thank our silver partners also, Cholamandalam MS General Insurance Company, the Universal Sompo General Insurance Company, the ICICI Lombard General Insurance Company, Star Health and Allied Insurance Company, the Export Credit Guarantee Corporation of India, and of course, the Spices Board of India. Friends, thank you once again and welcome to all of you from all the continents of the world. Thank you.
Thank you so much. That was Mr. Ashok Kapoor giving the opening remarks. Thank you so much for laying out the theme and the idea behind today's very, very special edition, Mr. Ashok Kapoor. And Now, moving on further, I would like to invite Lieutenant General J.S. Ahluwalia, the President of Institute of Directors India, to please come forward and deliver the welcome address.
Thank you. Good afternoon, ladies and gentlemen. A very warm welcome and best wishes on behalf of IOD for your good health and happiness. IOD, a membership-based association of corporate directors, basically focuses on future directors for the boards and keeping them updated. And secondly, to prepare boards for the future. During the COVID year, IOD has been hosting a series of special webinars to discuss future directions for sustainability amid the pandemic, in key sectors especially. The last one was on power and energy sector. Today we focus on financial sector, mainly banking and insurance, to discuss strategy, directions, and roadmap for the challenge. Today's financial news in the papers covered OECD's forecast that in the COVID financial year 2021, India's GDP contraction will be down only to about 7.4%, while the GDP growth in the financial year 2022 will be globally highest at 12.6%. And the second news was by the DPIT Secretary that for the ease of doing business, government plans to eliminate or reduce about 6,000 compliance norm barriers to repeal archaic laws and reduce regulatory burden, no policy uncertainty, and to ensure predictability over the horizon. This is a very good news for the corporate. Our Honorable Finance Minister, Srimati Nirmala Sitharaman ji, who through periodical financial stimuli maintained right balance between fiscal imperatives and social economic welfare during the lockdown in 2020. Her simple budget for financial year 2022 was the right spark to turn the recovery economy into an engine of growth for an Atmanirbhar India with over 11% of GDP growth next year, which is what I said. OECD today thinks it will be 12.6%. Her budget with a counter-cyclic fiscal policy laid a roadmap for fiscal consolidation and high growth for the next decade, meeting the targets of $5 trillion economy by 2025. That is the target of the Modi government. The suggested structural reforms to boost consumption and growth in stressed sectors, create credit flow, attract FDIs, increase consumption at corporate and consumer levels, ensure debt sustainability to create over 1 million jobs each year, the strategic need for asset monetization, especially of non-core assets and of loss-making PSUs, to speed up private investment and raise revenues. Mega plans with 34% increase in infrastructure spending and 135% increase in healthcare spending and additional financial support for MSME organizations. All micro indicators and trends suggest strong V-shaped economic recovery for India. Corporate is back already at over 75% of the pre-COVID levels, and early green shoots can be seen in cement, steel, and auto sectors. The stock exchange rally over the last 1 month, moving beyond rupees 51,000, reflects strong economic fundamentals and good future growth. The financial institutions will need to move away from the one-size-fits-all to cutting-edge specialization in certain domains. The digital payments and wallets have been two such low-hanging fruits. The technological revolution is decentralizing the money business. Banks need to be back to the drawing boards to rethink their digital strategy, embracing innovation, simplification like never before. banking and insurance sector look poised to become important agents of change. Tectonic changes are underway in the banking sector, like reducing number of public sector banks, diluted government shareholding, but add capital and provide a framework to deal with NPAs. The banking sector requires triple transformation with policy and regulatory dispensation for replenishing capital, resolving the twin balance sheet issues, and replatforming banks for digitization. For corporates, insurance is basically transfer of risk. Technology and analytics give deeper insights as to how the same risks can be reduced in future. Without insurance, there would be less appetite for risks. During the next decade, India's insurance industry is likely to grow by over twice the GDP growth rate. The banks are digitizing their business models more meaningfully beyond basic automation. Given the availability of long-term capital with insurance companies, the government may raise their investment limit in bank issues. It will improve their return on investments, besides providing an enhanced avenue for capital raising for the banks also. IRDA may also allow insurance companies to invest in debt securities, including infrastructure and real estate investment trusts. The move could help bring more funds to cash-starved infrastructure sector and be a game changer. India's insurance industry is projected to be managing rupees 35 lakh crore of assets by the end of this financial year. That's a large sum. India today is the world's third fastest growing startup hubs. It added more than 1,600 technology startups in 2020. The country today has about 55,000 startups functioning. Even the pandemic did not dampen the startup spirit of Indians. It is still tricky for a startup to find an initial investment for giving its idea a shape. The equity funding led by angels and VCs continue to be the most popular options, primarily because of their high risk appetite and ability to come in to guide and partner with companies apart from mere capital infusion. The success formula for any startup resides in what impact it is capable of creating, rather than whether the idea has already been tried and tested in some other part of the world. I'm sure our eminent speakers today will highlight various options for a winning strategy for the country and a roadmap for the growth of banking and insurance sectors. I welcome these stalwarts that include Dr. Anup Vadhavan, our Commerce Secretary, Dr. Debashish Panda, Secretary Financial Services, Mr. Tuhin Kant Pandey, Secretary Investment and Public Asset Management, Mr. Vipin Anand, MD LIC, Mrs. Anamika Roy, MD IFCO Tokyo General Insurance, Mr. M.K. Poddar, Chairman Agriculture Insurance Company, and Mr. Sharad Mathur, MD of Universal Sampo General Insurance Company Limited. I wish you all a very happy and useful day. Thank you.
Thank you so much, General J.S. Ahluwalia. That was the President of Institute of Directors, India, delivering his welcome address. And now we would straight away move on to a very, very, very special guest of honor keynote address that's lined up next. For all of you who've joined in from different parts of the world, we are deeply honored to have amongst us our guest of honor, Dr. Anup Vadhavan, IAS Secretary, Department of Commerce, Ministry of Commerce and Industry, Government of India. He's with us today to deliver his guest of honor address on leveraging policy disruption for dynamic economic growth. He brings with him a wealth of experience in transformational leadership. He has served in various roles at the Department of Commerce, Director General of Foreign Trade, Department of Financial Services, Department of Economic Affairs, and Prime Minister's Office of India. We are honored to have him among us, and he is here to share his insights and his wisdom and guide us as to how he thinks we all should prepare for a more sustainable future. We are very, very grateful to you, Mr. Vadhavan, for joining us today. Thank you for sparing time from your very busy schedule with me.
So thank you so much. I'm excited to be here amidst this very, very distinguished group of participants. And let me at the outset thank IOD and in particular Mr. Ashok Kapoor and Jayant Ahluwalia for making it possible. I'll take some poetic license and talk about India as an investment destination in broad terms, into which I think the financial sector and the insurance sector fits in as a major segment, and leave it to my colleagues who will speak later to fill in on the details about finance and insurance. So I think we are meeting at a very historic moment in the economic history of the world. Right since 2008-9 global financial crisis, the world economy has seen major challenges. Starting from 2008-2009, there was a long drawn-out recovery phase, and just as the recovery looked to be strengthening, we saw various developments involving protectionism, unilateralism, the trade dispute between the US and China. And in 2019-20, we saw a recession creeping in once again, and all doubts were extinguished when COVID came in towards the end of 2019 and came in as a full-fledged pandemic by the time 2019-20 came to an end. And we saw an unprecedented economic toll on the global economy. We saw a huge loss of human life. The human toll was, of course, not as bad as it could have been thanks to modern medical technology, but it was magnified, of course, by the greater transport and communication linkages we have today. Economic toll was unprecedented in today's globalized world. The Spanish pandemic of 1918 had a huge human toll in spite of the relatively lower human connectivity, although World War I was raging, and as a result of that, people were moving around. But the economic toll was not as pronounced because the world was less connected. So the economic toll, which is the perspective we are looking at today, was absolutely unprecedented. I'm happy, of course, to note that India bore this impact well. India faced this challenge and came out with many areas of success that we can celebrate. I think we reinforced our position as major suppliers of pharma products and vaccines to the world. We met the needs, the huge needs in the face of COVID for certain pharmaceutical products and vaccines admirably well. Along with meeting our own very, very significant needs, we have a population of our own which is billion plus. So I think that is something we need to celebrate and take credit for. As far as personal protection equipment is concerned, I think at the onset of the pandemic, our production was negligible. By the time a year or so had gone by, we were producing personal protection equipment in huge quantities. Our manufacturers had adapted their facilities, they acquired or developed the technology. Even products like ventilators, our industry adapted very quickly and responded admirably well. In addition to pharma, in certain other critical areas also, our economy withstood the COVID shocks admirably well, especially agricultural products and primary products. Our food supplies our food exports to the world grew significantly during the COVID period. There again, it was a critical need perceived by the world. Demand for products like rice, etc., went up hugely as far as Indian suppliers were concerned, because I think agriculture was disrupted in many parts of the world because of COVID. The Indian economy, the agricultural segment, was fortunately not impacted that much because of its very nature. It had the capacity to respond to this need, and we were major exporters to the world, and our supply of food products to the world went up significantly during the COVID period. Notwithstanding these successes, the impact was huge on our economy. We all know that first quarter of this financial year, there was a over 20% decline in GDP. In the first month of this financial year, April 2020, there was a 65% decline in exports. But since then, there has been a steady cumulative recovery. Our exports turned positive in September 2020. After September, they were borderline negative for a few months. Then January, it was positive again. February was more or less even. And now March is again promising to be significantly positive. So we have borne the shock well, and we've recovered fairly quickly from this huge shock to both the supply and the demand side. This was not a typical economic shock which generally occurs on the supply side, but it was a shock both on the supply and the demand side. The supply shock was so huge that it had the consequent demand shock as a counterpart. And if you see our performance, if we leave out petroleum products and gems and jewelry, then our export performance is even better and the recovery is even quicker. Gems and jewelry, by their very nature, they were a major part of our export basket, but by their very nature, in a recession, that is the demand which will be impacted hugely. No one is into buying gold and diamonds in the face of this economic adversity. And similarly, petroleum products also, by their very nature, were impacted severely. Both these are major components of our exports. If you take these out, fortunately, they are low value addition items. Of course, the economic impact is significant, but they are low value addition items. So if you take out these items, our export performance and its recovery has been even more remarkable. Now, we need to recover in these areas, and we need to sustain the gains in areas like pharma, food products, which I mentioned, other primary products. Steel exports are also growing significantly. So we need to sustain all these gains and recover in the areas which are still lagging behind. And the GDP indicators also, you would have seen, have improved. First quarter I mentioned was over 20% minus, second quarter roughly 7 to 8% minus, and then third quarter has turned positive. So GDP also is recovering. RBI's list of indicators, 60 of them are turning positive. So we've come out admirably well. And the other silver lining is the fact that this disruption is an opportunity. This COVID disruption will result in many long-standing paradigms being questioned and many things changing forever. In some senses, we'll never return to the pre-COVID world. There is talk of de-risking and realignment of supply chains, of investment flows and economic ties. There is talk of global value chains getting compressed. When you de-risk and you realign your supply chains, you will tend to bring them closer to yourself to lower the risk involved in diversifying excessively in your supply chains. And you will bring it closer also in the sense of dealing increasingly with entities with whom we have a comfort. The overpowering or the dominating influence of cost minimization, which was behind supply chain diversification, that dominance will to some extent be reduced by this concern about lowering the risk. Cost minimization leading to excessive diversification was at the cost of raising the risk of that entire supply chain, and there'll be an effort to focus on the risk aspect and lower the risks in our supply chains. So all these are opportunities for countries like India to attract investment, to be part of these realigned supply chains. The other tendency will be for a movement from the physical to the virtual. In many ways, certain things will not go back to the physical. That virtual arrangements than they did in the earlier physical. I think and here again, given our credentials as an IT power, given our credentials in the digital space, I think India has a tremendous advantage in meeting the requirements of the world in this area. And the other aspect I would like to highlight is the fact that we must take advantage of this opportunity by offering ourselves as a world-best alternative for businesses, whether it is for supply of goods and services as supply chains get readjusted, or whether it is as an investment destination. And we need to look at this entire aspect in a short-term, immediate sense and a medium to long-term sense. In the short term, our capacity to reach our full potential as a supplier of various goods and services, as a key component of supply chains, will be limited by the present manufacturing environment. But in the medium to long term, the sky is the limit, and our effort is that in the medium to long term, within a few years, we should enhance our attractiveness as an investment destination, fill all the gaps that are there presently in our manufacturing space, elevate the entire manufacturing and investment ecosystem in the country so that your long-term potential, which is huge, that the long-term potential is achieved in the near future. When I'm talking long-term, I'm talking about the next 2, 3 to 5 years. So that's the kind of goal we need to achieve. And how do you make yourself an attractive investment destination? I'm happy to note that many of the tasks which we need to undertake to make ourselves an attractive investment destination have already been accomplished and are well on the way to getting consolidated. In particular, the entire ease of doing business space. I think you'd all be familiar with our rankings, which have gone up significantly in the last several years in the ease of doing business rankings of the World Bank. We've digitized most of our approval processes. We've digitized all our operational approval requirements. Our processes are paperless and do not require face-to-face meetings. And this is backed up by a focus on the physical environment. The virtual space of approvals is one aspect. The physical environment in terms of logistics, in terms of infrastructure, in terms of a land-based plug-and-play platform where manufacturers can quickly set up their units. There again, there is a huge focus, including, the utility space, whether it is power, water, issues like labor. All these have seen major changes. We are familiar with the SCZ platform, of course, which is a land-based platform with a decentralized single window system under the development commissioner. There are programs for developing industrial clusters, industrial cities under the Delhi-Mumbai Industrial Corridor. There are ready land banks available for investors to tap into. And over and above this, to improve this physical environment for investors and to make it attractive, we've introduced the production-linked incentive schemes for various sectors, 13 sectors. To the extent our manufacturing environment is still somewhat high cost, to the extent the complete impact of the reform will take time, there is the production-linked incentive scheme to make our environment attractive to investors. Then let me highlight the services sector opportunities. The services sector opportunities are huge. If you look at, Industry 4.0, you look at this entire new area of Internet of Things, artificial intelligence. If you look at our prowess in research and development, if you look at our prowess in terms of the skill sets in engineering, skill sets in IT, then this is another ripe area for investment, which is very, very attractive, cost effective. And already we've seen huge investments in the R&D space, in the services space. So this is another area. Finance and insurance are segments of this services sector. The banking policy environment was already very liberal. The regulatory environment was very sophisticated, hands-off, digitized completely, whether under SEBI or RBI. And the FDI rules were very liberal. So the entire, the trading architecture is, I think, state of the art. If you see our capital markets and our securities markets and our stock markets, the trading infrastructure is state of the art in terms of technological sophistication, reliability, cyber security. Insurance sector, again, we had a state of the art statute which came in with the last insurance laws amendment bill. There were concerns about the FDI limits not being high enough. That concern also has been addressed in the last budget, and now the FDI caps are going to go up. So insurance, banking, and pensions again. Pension sector again is a very liberalized environment with all these features. And I'm not very sure, but I think with liberalization of the insurance sector now, FDI caps, pensions gets automatically liberalized. I'll leave it to my Secretary DFS to clarify that, but my feeling is that pension sector will also get further liberalized. So you see, our effort is to achieve not only the immediate potential of India, which I've said is going to be limited by our present manufacturing environment, but to achieve its true potential in the next 3 to 5 years, based on all these elements, based on investment coming in. And there are examples all around of countries transforming in this manner at a rapid pace. I think the example of Vietnam is given very often. Vietnam, in a matter of 5 to 6 years, which is the kind of time frame I'm talking about, has transformed its investment environment with huge successes and very, very good outcomes. And you see, the other thing we need to note is that India has certain other strengths. Strengths as a democracy, strengths as a country with institutions that are independent and accountable and can be relied upon. And numerous investors who've been in the country for decades, they might have faced some teething issues, but then in the long run, India is in many ways the most desirable investment destination. There is an element of strategic comfort based on all these factors for investors. And I think COVID has demonstrated the importance of this comfort, the importance of this strategic de-risking of supply chains and investment destinations. And I think this is an aspect which we need to keep in mind and which we need to highlight in promoting India as an investment destination. And let me also mention, since we have people from across the globe, I suppose potential investors, many of them, let me mention Invest India, which is a single stop destination for any potential investor to get all issues, starting from approvals to land, to water, to power, to infrastructure, logistics, railheads, road heads, all the requirements. There's a single stop in Invest India who will point you in the right direction, handhold you till the very end, till your investment has been executed on the ground and is operational, and they will handhold you even at the operational stage. And the idea is that you essentially deal with a decentralized, empowered single window, like something like the development commissioner of an SEZ, who is located right there where the land is. You have to deal only with a simplified single window. So that is the entire aim. So let me not talk too much more. I think I'm close to exhausting my time if I've not exhausted it already. Let me just say that I look forward to working together in this endeavor, which has huge potential for mutual gains based on vast complementarities across the stakeholders, complementarities across the key ingredients of business success, whether it is land, labor, skills, costs, technology, capital, demographics. If you look at all these ingredients, there is huge complementarity when India and the investing world is taken together. If there is finance and capital and technology in one place, there are skill sets, land, labor, a huge market in another place. So taken together, we have huge complementarities for mutual gain. We can progress together. We can achieve desirable outcomes together in a mutually beneficial manner. I would encourage all of you to look at India as a key and attractive investment destination. We'll be happy to work with you to resolve any issues that crop up. Invest India would be happy to work with you. So I look forward to being in touch with you. And let me conclude by sincerely thanking the organizers and thanking all of you for sparing the time to be with us today and for your interest in being here with us today. So thank you. Thank you so much.
Thank you so much to you, Dr. Vadhavan, for sparing time for this webinar and then sharing in such detail the opportunities that actually board of directors can actually dive into, even in this era of pandemic, and can actually have a turnaround for the organizations. Thank you so much. And there are just so many questions for you in the chat box. So I think it's just fair that we give them time, because there are a lot of them looking forward to answers from you. But to chair this very, very special Q&A session, I would like to invite Mr. Shailesh V. Haribhakti, who's the FCA Chairman, Western Region IOD India, and Board Chairman, Audit Committee, Chair and Independent Director on multiple boards in India, and also the Chairman of Shailesh Haribhakti and Associates in India. Not just that, Mr. Haribhakti has been a great supporter of IOD for years, and we are extremely grateful for his continuing support. Over to you, Mr. Haribhakti, for this very special Q&A session.
Thank you very much, Dr. Vadhavan. It was an absolute delight listening to you. I was riveted by your two expressions: investment destination, which India certainly is, and the second is the strategic comfort. These are such powerful notions that at boardrooms, this is the kind of language we wish to hear to make sure that attraction to India becomes really tangible. My question is, again picked up from the chat box. Mr. Dhanendra Kumar has been remembering you. He is asking about the role of FTPs in this whole process of getting the global trade initiated and developed. And my own question is about how much facilitation will be given in terms of timely cutoffs for expressions of interest for large projects, making sure that global trust in the timeliness of our processes will be enhanced. So two questions for you.
No, thank you so much for the very kind words. And thank you for these very interesting questions. So, see, FTPs, I think, are a key element in our economic strategy. We need FTPs for various reasons. One reason is that your economic system must be exposed to a competitive pressure to perform. I think we are familiar with the pre-1991 days and, putting walls around you and protecting yourselves unreasonably. Of course, there are some arguments for protection based on the infant industry argument, which I'm all for and which I think a government has endeavored to provide also. But beyond that, you need to put your economy to competitive pressure. You need markets abroad. Notwithstanding the fact you're a huge country with a huge market of its own, but still, given the kinds of production volumes required today for economies of scale, you cannot do without markets overseas. And there you are, if you're going to compete with people who have FTA access into those markets, then you're handicapped. Our main rivals in that business have a lot of FTAs overseas, and there in those markets we will naturally be handicapped. Of course, we must keep in mind the fact that India has 16 trade agreements. We have 10 FTAs, we have 6 PTAs, we have FTAs with major economic powers. We have an FTA with ASEAN, Japan, Korea. We have an FTA for the region under SAFTA. We have other FTAs, including with countries like Chile, Mercosur. So we've not done badly in the FTA space, and then we are serious about growing this space. You must have read in the papers, we are seeing the EU, the UK, Australia, Canada as new destinations for FTAs. So I certainly agree FTAs are important. Timely cutoffs, yes. I think most of our processes have cutoffs built into them. We are increasingly working towards either removing many approval requirements, we are removing many renewal requirements for licenses, and making them indefinite, subject to some periodic scrutiny, and deemed approvals. So all these are parts of our effort to reduce the compliance burden. If you look at the entire labor statutes which have come in, they have, I think, reduced the compliance burden significantly.
Tremendous.
So certainly very important area which we are focused on. And if something comes to your notice where we are still lagging or something which has escaped our mind, do tell us. We'll be happy to look into that.
That's so spontaneously great of you to say that. It just shows the willingness of Government of India to support Destination India as an investment destination. Thank you so much.
Thank you.
I will close this question answer session because what was permitted to me was 2 questions and I have used my whole quota. So thank you very much.
Thank you. Thank you so much. I enjoyed being there, and I'll be lurking in the background to listen to the further deliberations. So thank you. Thank you so much.
Thank you so much. Thank you so much, Mr. Vidhavan, for addressing all the queries that were. And thank you, as always, Mr. Hari Bhakti, for conducting this Q&A session that well. We'll have you for more from the rest of the speakers. For now, it's time to move on to our next guest of honor keynote address. And for this, we have someone again very, very special, Mr. Tuhin Kanta Pandey, IAS Secretary, Department of Investment and Public Asset Management, Ministry of Finance, Government of India is with us today. And this address is going to be on driving India's strategic disinvestment policy for a promising future, preparing the boards of directors. We are very, very pleased to welcome Mr. Tuhin Kanta Pandey for this with us. Now, as we prepare for a new era with Government of India's many, many transformational initiatives, the future looks quite promising for the insurance sector in India, which we were as discussing, is expected to reach about $280 billion. So we are honored to have amongst us a transformational change agent that our next guest of honor is, who's been working on the mission of driving India's strategic development policy with a promising future. Mr. Pandey brings with him more than 3 decades of experience, and he has worked in various capacities with the government of Orissa and Government of India. And he has acquired wide experience in the areas of industrial development, financial management, and public finance. Not just that, he has been instrumental in bringing about several institutional innovations, new policies and systems in all the departments he has served. So thank you once again, Mr. Pandey, for sparing time for joining us this afternoon. Very, very privileged to have you here. Thank you so much. And over to you for your address.
Well, thank you, Institute of Directors. Thank you, General Ahluwalia. Thank you very much, Mr. Kapoor. My senior colleague, Dr. Anup Vadavan, had a excellent context, which was said both in terms of COVID and otherwise. So I would not really repeat what he said. And I will just try to, put my presentation in two parts. One, I would like to touch, some key trends that in the Indian insurance industry, knowing the fact that today's focus is on insurance. I would also like to, highlight some of the key budget highlights relating to some of the key changes that we are bringing in, and also the sectors in which insurance is integrally connected with, in terms of investments and so on. Now, if you look at the key trends in insurance industry in India, unlike the advanced countries, the life insurance industry in the country is expected to grow 12 to 15% annually over the next 3 to 5 years. This is according to the IBEF. And while it is might contract in advanced countries, in the life side, India, emerging countries and India, they're bound to grow both on the life and the non-life side. The second important trend is that the increase in insurance products, the need is now becoming ubiquitous. There's some of the products which were not at all being used by the insurance companies have started to gain traction. The third, there are several standardized products which have been brought in by IDAI, the insurance regulator. In terms of, for example, the Arogya Sanjeevani, and later the standard term life insurance plan, which is Saral Jeevan Bima, which was started in 2021. And a regulator has also asked insurers to launch a standard travel insurance from April 1st, 2021. The next trend is that on-demand insurance, and we have now something called switch-on and switch-off insurance also. For example, usage-based car insurance, which can come in, and also which will reduce the cost of consumers, and especially during pandemic time, it has been very, very useful. There is also a very strong trend for increasing private sector contribution. If you really look at the market share of private sector companies in the non-life insurance sector, which has rose from 15% in 2004 to almost 56% in 2021. So in life insurance segment also, the private players had a market share of 31% in the new business in FY 2020. The crop insurance is driving growth. It contributed 20% to gross domestic premiums of non-life insurance company in FY 20. You have now more tailored offerings in health insurance segments. Now the customers are able to pay their health insurance premium in installments. Earlier, they used to collect it at one go. So the new offerings are coming on. And there's a more focus on embedded value than profitability. And the large insurers continue to expand, focusing on cost rationalization and aligning business models to realize reported embedded value and generate value from future business rather than focus on present profits. A lot of opportunities lie ahead. The digitization of distribution chain and cross-selling. It's an enormous opportunities. Indian digitization will play a big role in expanding the reach to the new customers. Then we have a partnership with other organizations, with local NGOs, rural markets, penetration with the very fintech companies in order to sell insurance. Digitization of verification, which is pushed towards eKYC process for completing the verification of the customers to buy health and term insurance plan. New and innovative products. Well, for example, Corona Rakshak plan, which is available for a time period of 3.5 months to 9.5 months with premium as low as rupees 100 per month. So a lot of innovations have to actually come from India. India is a market where, probably Prahlad said, the bottom of the pyramid. And here, lies a great opportunity of an unpenetrated insurance market still for various insurance companies to innovate, and coupled with the IT and digitization platforms and the savvy with which, even the rural and even, in the remotest part, India, with a very good penetration of broadband now, and they are getting into the digitized products like never before. The standardization of products by ADA is another very important opportunity, both across health, life, travel, large untapped market, 75% of Indians not having any sort of insurance. And this is a Bloomberg Quint estimation. And this standardization of products and online sales will expand into the large untapped market. We have an increased investment in Indian insurance industry, and there is an opportunity there, particularly in terms of net own fund requirements reduced from 5,000 crore to 1,000 crore, proposed to facilitate onshoring of international transactions. And of course, the new FY 21-22 budget, in which the FDI will be raised from, has been announced to be raised from 49% to 74%. And bill in this regard will be actually brought in very much soon. My colleague, Secretary DFS, will probably throw better light when he comes next to this webinar. Strong policy support is for boosting insurance. We had 4 major schemes, for example, Government of India flagships, which have actually improved penetration: Pradhan Mantri Jan Suraksha Bima Yojana, Pradhan Mantri Jeevan Jyoti Bima Yojana, Atal Pension Yojana, and Ayushman Bharat Yojana. There's 4 key schemes there and all that. And strong potential in crop insurance sector. The awareness is still about 38%, and it's the largest market in the world, even at that level. And more focus on this and more awareness, which means more crop insurance and better crop insurance. We do have, of course, the key risks and threats. And, but the point is that this is a growing market, and India's growth budget, which is the FY 21-22 budget, will push this forward further, the demand and as well as the supply of insurance products. We have, of course, some limitations in terms of, the insurance company in public sector space, where we really do have lack of capital. And I think that is an important concern that the government is facing, and going forward, that would be addressed. But we are sanguine by the fact that a lot of private insurance companies are actually increasing their market share quite handsomely, and they are innovating. And I think that's the ecosystem that we should look forward, that the insurance regulator will actually indeed provide going forward. Now, let me come to, the important issues that actually will spur growth. Because I think that is where we are all linked, because insurance market, while it really earns premium on the one hand, it also deploys long-term funds. So it's insurance sector is something which is there on the both sides of the growth. Well, it is dependent on the demand, for its own premium. But when it invests the premium, it actually creates a lot of infrastructure in the country. And that is one of the very important very, very important goals of this budget, to stimulate capex cycle, to trigger the capital investments. It is a stimulus budget, because for the first time, the finance minister has taken a call on actually have the stimulus rather than actually go for fiscal consolidation at this stage. Rightly so, because there's a time when, we have to kickstart the investment cycle before the capital investment sentiments, so-called animal spirits of the private sector get kicked in. Now, how do we stimulate this capex cycle? Well, a lot of things. There are 3-pronged approach there. One is that we are trying to lay down a very important financial institutions for long-term capital. We've been talking about asset supply mismatch while we are dealing with, the banks financing the long-term infrastructure, which is always a problem. So therefore, the need for the DFI, which has been announced, and the bill in this regard will be actually tabled in the parliament very soon, where it will be a large public sector, a large institutions, the DFI, and which FM has said before, the bill will also provide for also provide for the private DFIs to come into picture. So it will not only be a single DFI. Of course, single DFI, large capitalized single DFI would be there, but there will also be provision for multiple DFIs possible under the private sector under the same legislation. So that's a very important innovation which is coming in terms of bringing in, stimulating that. I mean, a lot of leveraging can then take place. A lot of funds can come. There are sovereign funds, the pension funds, the insurance funds, there are wealth funds, and they are waiting for good opportunities to be there. We need to have an ecosystem, and I think we should be providing with this institution. The second aspect of that budget is that wherever the public investments can take place, where the government itself is trying to put in the money on the roads, on airports, on railways, on various infrastructure projects, as well as the public sector companies that we have, they have their own ambitious capex plans, and this is actually spurring demand as well as the supply, and also creating employment opportunity and triggering the virtuous cycle that we have been talking about, the growth cycle. The third leg of this capex plan is an asset monetization and asset recycling, where we are saying that there would be an asset monetization plan, a national asset plan, which is actually grounded also, so to say, in the national investment pipeline. We have an NIP of more than 100 trillion rupees over the 5 years, and within that, we have identified prima facie a core asset monetization of 2.5 trillion rupees, which will be in pipelines, in roads, in power sector, in transmission lines, in airports, in berths in the ports, and even the sports stadia. I mean, the idea is that you have the projects and you de-risk the project, and once they have put it in cash streams, you bundle them into projects like TOTs, InvITs, REITs, and so on, and then try to put it in there. And that could be a very important source of investments for insurance funds, for example, insurance companies, as well as other funds which are there, the pension fund, the sovereign funds, which are waiting to get an opportunity to come to India and make returns. So this three-stage cycling plan, in which I think the Deepam, my department, also in one sense, is quite actually intrinsically linked with this growth strategy that we have. Fundamentally, we have got two major points. One is a new public sector enterprise policy. We do have a lot of public sector enterprises still in that, and a new privatization policy has been announced, where, barring the 4 sectors, and those have been actually stated, barring the 4 sectors which we say strategic, the rest of the sectors, we are saying that the public sector enterprises will be privatized or closed. And there in the strategic sectors, which are 4 strategic sectors, only a bare minimum presence of public sector enterprises will be maintained. And one of them is the banking, insurance, and financial services sector. So the first time, the banking and insurance has been intrinsically linked to an overall policy rather than a segmented banking policy, which was earlier being talked about. So we have an overarching framework, which is a long term, which is a medium term, which actually will guide next 4-5 years how our private sector and public sector enterprises, either in the operating side or on the banking and insurance side, will remain, will go, will be privatized, will be closed. So a certain kind of a strategic vision has been unveiled that will actually prepare all the stakeholders accordingly. The other point is that, we have upfront announced, the FM has announced that there will be a privatization of 2 banks, public sector banks, and 1 insurance company. And this has been announced both as a policy as well as an action agenda. Policy is important because legislation is involved, so legislative changes will have to be done. Action, because I think even the initial number has to be given, not to say that is going to be the final number, because as I said, the final number is bare minimum presence of public sector enterprises in this strategic sector, which is called banking, insurance, and financial services. So I think there is a fair amount of clarity in the budget as to how we want to go forward. It is a more action-oriented budget. For example, there is a mention of LIC IPO. As you know, the Life Insurance Corporation is one of the largest institutions we have. We are almost like assets to the tune of 36 trillion rupees under management. And this is an organization where we see a lot of potential for further growth and further change, and also to say that some of the wealth which has been created will also be shared with the shareholders. So an IPO will be brought in, and the budget clearly says that the IPO will be brought in the FY 21-22. So, and then there is also, apart from the two banks, there is also an IDBI bank, which has already been announced to be disinvested. So, which means that you have three banks and an insurance company, which has been announced, and of course, an LIC IPO. So these are the things, and they are into, this broader market of this. Now, just briefly, I will touch upon, if I have 2 minutes time, to touch upon the stock market and how we are handling that, because a lot of insurance players would also be interested in how we are as PSU stocks handling. Deepam actually handled the equity of the PSCs, public sector enterprises, and we have had some change in our strategy. One, we have been very, very clear about the valuations and the fact that the investing people in the PSU stock should be a rewarding experience. And therefore, some of the steps that we have taken in this regard have been stated clearly to the market, that we will not go for a repeated offerings on the same stock, as well as we will not have the equity ETF in the markets because of their price overhang concerns. So we have off late, we have seen for the last quarter or so, the PSU stocks are back in the reckoning, and there have been a re-rating of the stocks, and people have been trying, because they are actually very, very important companies. And we have also announced a consistent dividend policy for these things. So therefore, dividends are ensured, because that particular dividend policy has been further fine-tuned to say that we need not actually wait for an annual dividend, and we can have as many as 4 interim dividends as well with every quarter in some of the companies, or maybe twice in a year and so on. And you would notice that even this financial year, we brought this policy a little late, but even in this financial year, you have several companies going for interim dividend twice already, even the last 3 months. So a consistent dividend policy is something which we feel that should consistently reward the shareholders, which also includes insurance companies and the pension funds and so on, which are also looking for returns on that side. And plus also our voluntary message that we will use our stock market offerings in an intelligent way, in a selective way, so that we don't really disrupt the market and we allow the existing investors to make good returns. So I think I've taken a lot of my time, but finally I will say the last one which we are doing for our public sector enterprises to actually, having in the memorandum of understanding, we have a memorandum of understanding which administrative ministries sign off with every public sector enterprise. And we have brought in several changes in those memorandum of understanding in terms of the criteria. And one of the criteria we have said is the return on equity and return on capital employed will be a very important criteria going forward for award of mark score to them, as also the asset monetization plan, as also their market cap of the listed enterprise. So this is in short I think I've taken a lot of time already, but I wanted to give you a little snapshot of Indian insurance industry, as well as what we have been trying to do in Ministry of Finance in terms of actually not only really I would say being a part of writing of the budget, but actually implementing. And implementation is the key. Thank you very much.
Thank you so much, Mr. Pandey, for laying down the trends in the insurance sector and also the potential opportunities that are opening up in the sector so well. And of course, we have a whole lot of questions waiting for you to answer. And to chair this Q&A session, once again, I would like to invite Mr. Hari Bhakti. Over to you, Mr. Hari Bhakti, for the Q&A session.
Mr. Pandey, that was absolutely brilliant. You have created a whole new space in the minds of global investors about the fact that Government of India is absolutely serious about making sure that ownership is privatized in a very significant way. And for this, I truly must express my personal congratulations to what your department must have done to bring about this amazing policy reorientation. And to think that you began talking about the bottom of the pyramid and then built around it digitalization and privatization and all the innovations that you talked about, I think that was simply stupendous. Two big takeaways that you left with us is that you are open to the idea of a DFI getting established by the private sector. We had not picked that up, at least I had not picked that up. So that was a major new insight. And the other big insight that you gave us is this whole idea of making sure that it becomes a rewarding experience for all investors, global and domestic. You have focused on making sure, and that's perhaps even a question to you, are the two elements of making this experience rewarding going to include high quality corporate governance and high quality sustainability actions? Because it looks like the whole investing community from the world is looking for these two aspects in a big way in making their investment decisions. So that is perhaps the first question. And the second question is whether the Social Security Code that is in the 4 parts that we are already aware of and which will have to be rolled out by the state governments, are those going to be the big harbinger of ease of doing business in India in a privatizing mode that you have defined so brilliantly? Those are the two questions from the chat box. And of course, there was a question of LIC privatization, but you have already answered that.
A very good question. I think that is very, very key question. The first one is corporate governance. I think it is it's really very heart of the issue, and I think our institutions, our government are deeply involved. SEBI in particular, and Department of Economic Affairs, Department of Ministry of Corporate Affairs are really very, very keen that the whole ecosystem of economic governance and the corporate governance, the fact that it is going to be more and more privatized economy, very openly and clearly stated, and in fact articulated by none less than Honorable Prime Minister, who came to Deepam's webinar, and this is available on YouTube, and you can listen to it. Those of you who have missed his address on the occasion of Deepam webinar, you could actually tune in and see mark his words, where I think there is a very clear political will and articulation of how it is going to be. So I think in that, the role of the institution, the role of corporate governance, the whole issue of independent directors and others, I think that we have to, all the different people who are involved, all the different ministries who are involved in the process would have to actually give a lot of attention to that issue. And I know there are deficiencies also. I have no hesitation in admitting that in many cases that we have vacancies and we have things like that. And I think that is something which we need to be addressing.
Thank you.
The second issue, of course, is the labor code. And I think that labor code is also a work in progress. It is not that we have really achieved the end of the road. The point is that, there are several things which have been achieved in the labor code and all that. And I think there is a greater ground being covered, and I think the states can certainly go even further than this. In fact, many states have actually ventured to go further than this, whatever is the central prescription, because it's a concurrent subject, so they can always go back and and Rajasthan did it earlier, even prior to even the thing. The idea is that what we really need jobs. What we need investment. We need. I mean, that's what it is going to make India, grow. When if we really want to say that we are actually putting ourselves as an important investment, destination. I mean, we have to be constantly mindful of that. That we can't be complacent. I mean, we have other jurisdictions also to be looking for. We could actually say strategic comfort. Yes, we are indeed. Those are important points, but that's not the only point. I mean, we have to improve infrastructure. We have to improve ease of doing business. We have to see that the people are able to put up their projects faster. The clearances are faster. There is a less of interference in what their business is all about. So I think these are all different elements which make an investment climate. So it's very important that we work on all of them. Thank you.
Thank you so much. Really great pleasure to interact with you, sir.
Well, thank you very much. I really enjoyed listening to my senior colleague earlier, and also, looking at the questions and so on. Thank you. Thank you very much.
Thank you so much, Honorable Secretary, for finding time from your hectic schedule and being here for the special edition of the Directors Dialogue Series. And thank you so much, Mr. Hari Bhakti, for conducting this Q&A session as well. We move on to the next session, but before that, a very important announcement, that is that Mr. Debashish Panda, who was to join us a little before in the program, will actually be making it by 5 p.m. Mr. Debashish Panda, IAS, Finance Secretary, will be here, and his address is now scheduled at 5 p.m. For now, we move forward. Of course, Mr. Pandey spoke about LIC while talking about the insurance sector, but now we're going to look at it in detail in our next keynote address, which is about preparing LIC for a new era, a game changer for productivity and India's robust economy. Ladies and gentlemen, India's largest life insurer, LIC India, the trusted life insurance provider to more than 250 million lives, is set to make history. It is set to achieve a milestone. Now, for this keynote address, we have himself, Mr. Vipin Anand, Managing Director of Life Insurance Corporation of India, with us. Now, he has been serving in LIC for over 37 years and has handled several important assignments in various capacities and departments in operations, as well as at the corporate level in all core areas of life insurance. Please join me in welcoming Mr. Anand for his keynote address.
Thank you, Ritika. Good afternoon, ladies and gentlemen. Thank you, Mr. Kapoor. Thank you, General Ahluwalia, for inviting me to this important seminar. It gives me immense pleasure to be in today's Directors Dialogue series amongst eminent directors on various boards and an international audience, where main theme of the dialogue is preparing the financial services sector for the future, both opportunities and challenges. As was just repeated again, Life Insurance Corporation India's IPO possibly remains to be the hottest topic of the entire year. And definitely I would like to shed some light on this during the course of this address. It is undoubtedly very important for the boards of the financial services sector to prepare for the future, especially in view of the opportunities ahead along with the challenges. When financial services sector is undergoing a lot of changes by way of mergers of several banks and also proposed disinvestments by the government in public sector institutions and likelihood of new entities in the private sector. As regards LIC, as we all know, the Honorable Finance Minister in her last year's budget speech had announced that listing of companies on stock exchange disciplines the company and provides access to financial markets and unlocks its value. we feel that the latter part will be very critical for the market as a whole and for the government as well, unlocking value in life insurance corporation, because over the last 64 years, a huge value has been built into the company, which maybe it is time to bring to the front now. Further, she said, it also gives an opportunity for retail investors to participate in the wealth so created. The government now proposes to sell a part of its holding in LIC by way of an initial public offer. LIC, as you all know, is possibly the largest life insurance company in the world in terms of number of customers. We have more than 280 million individual policies which we are servicing. And in addition to that, almost 112 million people are covered under our various group insurance schemes. Moving towards this, in that light, the government has proposed amendments to existing provisions of LIC Act, bringing them in line with Companies Act and SEBI listing obligations and disclosure requirements regulations, putting a greater role in corporate governance by the board with the presence of 4 independent directors. If we look at India's economy and LIC's contribution thereto, we see that as on 31st March 2020, out of a total asset size of rupees 32 trillion at that point in time, rupees 24 trillion are invested in government and public sector, contributing hugely to the development and infrastructure development and other efforts of the government of India. With a market share of 72.92% in policies and 66.45% in first year premium as on 28th of February 2021. We are predominantly contributing to strengthening insurance penetration for India's economy. Compared to its peers, LIC has relatively diversified geographical presence. We are there almost all over the country from corner to corner. And in addition, we are also present in 14 countries across the globe. Through tied agency continues to remain dominant channel for LIC's individual insurance business. We are very aggressive on bank assurance and digital marketing initiatives also. We have 7 products which we are selling online, and we have more than 52,000 bank outlets selling our products all over the country. If we look at the productivity of the tied agents, and the reason why LIC has persisted with this mode of distribution is that on the one end, they are a major area of connection throughout the country, especially in the rural areas and distant areas. And on the other hand, the productivity of LIC's agents in premium procurement is more than 3x, and in policies more than 9x of the average size of our peers. On the investment fund, with long-dated investments and equity exposure, the market value of LIC's investment is 10 to 12% better than the reported book value. There is a lot of value in the stocks which we have acquired over a long period of time, and we are a major player in the stock market. And with the steady premium growth, there has been net addition to AUM year on year. Currently, our total assets are to the tune of 35.5 trillion rupees. Our solvency margin on such a huge base is at 1.64%, which is significantly higher than the regulatory requirement of 1.5. In other areas, claim settlement, digital adoption, CRM initiatives, direct benefits under government schemes like PMVVY, BPVY, etc. LIC's role has been significant in view of continually adapting to changes as per the need of the hours. In fact, that is our greatest strength. Over the last 64 years, the corporation has moved from strength to strength. And during the last more than 20 years of an open era when we are competing with 23 private companies currently, carrying some of the most illustrious names in the life insurance market in the world. Maintaining this kind of a market share has been possible only because we are a very dynamic, forward-moving company which has adapted technology in a very large manner. The aforesaid key indicators show that LIC over the years, with the board constituted as per the LIC Act, has been functioning well on all critical parameters, including that of corporate governance, and has recently been bestowed with the prestigious Golden Peacock Award for corporate governance. However, presence of now mandatory greater number of independent directors in view of amendments in LIC Act would further strengthen the Life Insurance Corporation for a new era, leading to more multifaceted productivity levels and finally deep-rooting India's robust economy. In fact, a robust corporate governance is a mechanism which requires companies to think beyond compliance and introduce systems which encourage value-based management. And so, with amendments to provisions of LIC Act in line with Companies Act and SEBI regulations, the Government of India has further empowered the board by amending Section 49 of LIC Act, whereby the board can now make regulations relating to various matters that are either incidental or consequent upon the various amendments proposed in the Act. Besides, since Section 149 of Companies Act, along with Schedule 4 of Companies Act, brings greater value to the board in view of Code for Independent Directors, where guidelines of professional conduct, role, and functions, duties, along with provisions for separate meetings and evaluation mechanisms have been clearly prescribed. LIC board to be reconstituted in light of proposed amendments to LIC Act would certainly enrich the LIC in a new era with resulting better productivity for all stakeholders, policyholders, and shareholders. Most probably, we would see in the days to come that most of the policyholders of LIC would like to become shareholders, which will also add huge value to the share markets. We expect that if this kind of with this kind of an issue, maybe 10 million new people could enter the share market because of their trust in LIC. And therefore, the strengthened corporate governance with presence of independent directors is likely to yield better results for both the important stakeholders. Government, while proposing amendments to LIC Act through Finance Bill, has mentioned that Section 4, Board of Directors, Section 19, Committees, and Section 20, Chairperson and Managing Directors, are amended in order to bring the provisions relating to corporate governance in alignment with listing requirements. Besides, other sections have been suitably inserted and modified to ensure compliance with the law and relevant standards in alignment with listing requirements. However, an important section of LIC Act, namely Section 37, which gives sovereign guarantee to LIC policyholders, has been kept intact to retain the faith of the customers, retaining the strength of the Life Insurance Corporation to continue its historical role in boosting the economy. Besides, the following factors with regard to Indian life insurance market, in spite of the challenges involved, place a great opportunity ahead for any life insurance company in India, especially for LIC, being the long-term player apart from being a market leader. India's life insurance penetration currently is just 2.7%, and density at $47 are substantially lower than global average, leaving a huge uncovered opportunity. Life insurance density is stagnant for a long time, despite increase in working population over the past decade. India has one of the youngest populations in the world and a large number of them, which form a huge resource pool for future customers. Household savings as percentage of nominal GDP, which was declining since 2001, has started increasing now and is expected to rise substantially in the coming years. There seems to be glowing light at the end of the tunnel in view of the following factors. Percentage of savings is expected to rise. Premium as percentage of GDP to rise consequentially. Expected increase in life expectancy, which was 67.6 in 2015, is expected to rise to 71.9 in 2035 and 75 by 2055, substantially improving the claim performances. Increase in share of insurance premium in financial savings is expected to go up from 17% in 2014 to 23% in 2020. India being the 10th largest life insurance market worldwide and 5th largest in area with rupees 4.6 trillion in total premium business. If looked at in purchase price parity terms, this would be substantially larger. Growth of total premium during the 17 years from 2000 to 2018 has shown a compound annual growth rate of as high as 17%, which is one of the highest in the world. In spite of all this, India continues to be under-penetrated as compared to China, Thailand, Korea, etc., which shows that there is huge potential for LIC to grow at a much faster pace, as well as for new players to come in. The increase in share of insurance and financial savings is also expected to drive growth in life insurance sector, and demand for pension-based products will increase with the rise in life expectancy. To conclude, let us rest assured that with the Government of India announcing listing of LIC, preparation of which is on for all necessary regulatory compliances, like determination of embedded value, consolidation of related financials, etc. LIC and the Indian life insurance sector is heading for a new era that would be witnessed as a game changer for productivity and India's robust economy. Thank you.
Thank you so much, Mr. Anand, for sharing insights on what is it that makes LIC such a dynamic player in the sector it is. And of course, we have lots of questions for you and we would like them answered. And to chair this Q&A session, once again, I would like to request our Western India Chair, Mr. Hari Bhakti, to please come in and take these questions forward.
Thank you, Mr. Vipin Anand. That was so delightful. I was born in 1956, the year in which LIC was formed. So I have a very special relationship with LIC, as you are fully aware. But what you have described is the absolutely giant financial footprint that LIC has established over its amazing period of existence over the last 65 years. And I think that is itself so commendable, that when you outlined your assets under management at 35.5 trillion, the number of life insureds at 375 million, my God, these numbers are just simply astonishing. And when you add to that the very interesting factoid that you gave out, that the value of your investments exceeds the book value by between 12 to 15%. And the penetration of insurance being so low, you have established the case for profitable growth over a very long, sustained period of time. And I was very happy to note that all the amendments that you outlined have already been made. And that is absolutely the speed with which and the alacrity with which this whole process is moving forward. So there is absolutely no reason to have any doubts that the IPO will successfully conclude during the next year. And so our great good wishes to LIC for serving the Indian public and creating 10 million new first-time investors. The retailization of LIC's ownership is something that will be just astonishing. So thank you for all of that. But let me ask you two questions. One of them was in the chat box, and I'll pick it from there. Is there any move in any segment of insurance to make the life insurance mandatory? Question number one. Related question. What is Life Insurance Corporation doing to create a far more enabling and attractive environment for annuities, which is something that once retiral concept becomes stronger in India and the penetration of pension funds and all of that becomes larger, the whole desirability of very good annuities becomes very strong. And the second question is, will all of this be propelled by machine learning, artificial intelligence, blockchain-based accounting, and all the other modern percepts which are driving the insurance business all over the world? Those are the 2 or 3 questions from us.
Yeah, answer to the first question. One thing which is there is that LIC of India has always been highly customer focused, whether it is in individual policies, like you said, and whether it is in pensions. I will deal with that part slightly greater detail, because let me share with you a secret which possibly people don't realize. LIC is not only the life insurer of choice. I'm not playing on the acronym, but it is also the pension provider to the nation. Outside of the government sector, we provide pension to the largest number. We have crores of individual policyholders who have bought individual pension policies from us in the different generations. So we had one Jeevan Akshay series which went up to Jeevan Akshay 18, and now we have a Jeevan Shanti policy which has been immensely popular. We, in our group insurance portfolio, for the last 2 years running, we have collected more than 1 trillion rupees, most of which is towards corpus of pension and superannuation scheme. So, in most of the corporate sector, the people are buying pension from us, and as well as the individuals, as well as people coming from LPS, all of those are ultimately getting their annuities from the life insurance company. And the products have been very attractive, as is borne out by the fact that more than 60% of our annual new premium for the last many years has been coming from the annuity sector. Currently, we have a product called Jeevan Shanti, which is hugely popular. We give some kind of an insurance coverage also during the deferment period, and thereafter it gives a guaranteed pension for the entire term of the policy. And it was one of our largest selling products in the previous. Second thing, technology has always been the forte of LIC. In fact, if you look at it, in life insurance or insurance in general is in a business which deals with so many people and so much of data that without a very strong IT infrastructure, you cannot run this business at all. And LIC was possibly the institution which brought computers to the country. We started computerizing as early as the 60s, which would be very surprising to most of us. In fact, our current chairman, Mr. Kumar, and myself, we were both programmers and systems analysts as far back as 1983.
Wow.
Corporation is today headed by people who have spent quite a lot of time in information technology. Today, we are at a stage where almost entirely all our operations are computerized. During the COVID period, we have gone into an overdrive on the IT area. In fact, today, 42% of our premiums, notwithstanding that fact that large number of our customers are in rural areas, 42% of our total renewal premium collection is coming online.
Fabulous.
Besides that, we have customer portal, agent portal, and other portals which are catering to the different needs of different segments. The customer portal today provides most of these services online. We have come to a stage where other than collecting policy bond, all other claim-related operations are today available. And that policy bond also very soon we are going to at least give this facility to our customer that they will be able to deposit the policy bond at maturity in the nearest LIC office. So they don't have to go to the branch from where they purchase the policy. We have a call center which is today operational in 8 languages. All major languages are covered in this. And because of this, we are able to provide information to all our customers in the language which they prefer. We have a chatbot called LIC Mitra, which is an artificial intelligence and machine learning operated chatbot. And in just over a period of 1 year, it has addressed 1.5 crore queries. And because of the machine learning built into it, the proficiency level or the success level of the queries address has reached 96%. That
Congratulations.
I think is
Fabulous.
anywhere.
Fabulous.
Very soon, we are planning to move to the latest technologies. We have recently revamped our entire IT system in all the areas, with which I think our speed of operation next year itself. In fact, we are at the concluding phase of our new IT project. And with this, I think the speed of our operations in the next year will go to as high as 10 times of what it is now.
Wow.
And subsequent to that, we are very soon moving on to blockchain and other emerging technologies. And we are almost ahead of the financial services market as of now. And another 2-3 years, I think LIC will be the leader as far as IT initiatives for customers and processes are concerned.
Fabulous. That is an incredible story, and congratulations to the entire LIC. Fabulous. Thank you very much. So the one question that came up just now is whether the public sector character of LIC will be retained after the IPO. Of course, we have already said that Section 37 remains undisturbed, so the sovereign guarantee continues.
I don't know exactly what public sector character means.
Neither do I.
but let me just point out 3 things. One thing is, even after 20 years of privatization, LIC remains the generic for life insurance in the country. People don't say life insurance karwaya hai, they say LIC karwaya hai. In 20 years, nobody has been able to change that.
Correct.
Second thing is, like I said earlier, the only reason of our survival and thriving for such a long time has been that we are a very dynamic organization. We are constantly evolving. It may be slightly different from the public notion of a public sector organization.
Okay.
But we are a very fast evolving and a fast adapting organization. That is the reason, because we have been able to maintain our lead so strongly. I think anybody who knows insurance industry would be knowing that nowhere in the world it has ever happened that after opening of the sector, a company has been able to maintain its lead even in 5 years' time. And here, after 20 years, we are still dominating. It is because we have an independent, distinct character of our own. I think LIC character could be a different thing. And for shareholders, another thing which I would like to tell, which is a very less known fact, we have a 64-year unbroken track record of paying dividend. I think the government of India must be the happiest shareholder.
Fabulous. Yes.
I think that should answer your question a little bit.
Tremendous, tremendous. Thank you. Wonderful. Great pleasure.
Very much, Mr.
Thank you so much, Mr. Anand, for finding time and answering all the queries. And once again, thank you, Mr. Haribhakti, for conducting this Q&A session. Really, really value your time, Mr. Anand. Moving on towards the next keynote address, which really focuses on a topic which is of peculiar interest to all of us, and that is digital disruption, of course, which is the future. Today among us, we have Mr. Yashish Dahiya, who is the co-founder and the group CEO of poised.com. He will be sharing his insights on the age of insurtech, disrupting an industry for transformational change. Now, Mr. Dahiya has a very strong belief that in India, people need more financial cover for death, disease, and disability. And the long-term profitability of the insurance industry depends upon how well the industry is focused on these 3. With that, he has built policybazaar.com into a 3,500 crore plus insurance marketplace within a short span of 12 years. We are very pleased to have Mr. Yashish Dahiya with us. Over to you, sir, for a keynote address.
After Vipin sir's presentation, and huge congratulations, sir. Obviously, what a phenomenal organization, and look forward to the IPO. I think digital disruption is the wrong word because as Sir pointed out, the insurance industry has been deeply digital all along. All the policies have been digitized. All the systems have been very digitally oriented. In a way, if you really think about it, if you look at the travel industry, way back into the 60s, Sabre, Galileo, etc., all airline tickets were always online. And the back-end systems were always there and very robust. And that is what enables this industry to move very seamlessly online, which is where you saw this industry did not get disrupted during COVID as well. My area of interest is a very special area, which, over decades, somehow we built a phenomenal industry, but over decades we missed two areas. And I think we all need to, appreciate that. There are about, I would say about 70 million Indian families who have income somewhere between 4 lakh rupees upwards, right? And I think all these families are somewhere in that sort of what you would call the missing middle, which we can call. And why do we call them the missing middle? They are not poor enough that they qualify for large-scale, government support. They are aspirational. If you ask all their children, they want to be 10 times at least wealthier than their parents. They want to be in better jobs. They want to be in, they spend a lot of money on education. They are very aspirational families. For any of these families to have the death or disease of the primary earning member is a catastrophe. It's a catastrophe because, that it's not just the money they will lose in terms of lost income. It's the opportunities. It's the generational loss. And I come from I'm a second generation in the city, or you could say first generation, because my parents are semi-rural, semi-urban. But I have seen over the last 2 generations, some of these impacts happen to what I would call middle-class families, where it becomes a massive struggle. I think pensions is another very, very big struggle. So why is it that during COVID, only 10% of what you call this missing middle had what you would call a health insurance policy? They went to a hospital and they had to dish out 4 lakhs, 5 lakh rupees. So anybody who went to a hospital, any middle class person who went to the hospital had to spend lakhs of rupees. But that wasn't from insurance. That was really from their pocket. Insurance, probably about 10% of them had insurance. And I think what I would like to say is, of the 70 million people, 70 million families, roughly about 210 million people, only about 10% have what you would call genuine coverage for life or health, or even a genuine coverage from a pensions perspective. But I think some of them, because of the great work done by LIC, the pension might actually be covered a lot better than health or life. And I want to, belabor this point a little bit, because sometimes we believe that, yes, there is a lot of investment activity going on, which has been providing insurance. And please, I don't mean any offense to anybody, but just, humor me for 2 minutes on this. Let's take a person who has a 5 lakh rupee income. He needs a 50 lakh rupee life cover, right? That's pretty common understanding. Now, if you want to buy a 50 lakh rupee life cover through an investment plan, you need to somewhere, if you look at the average sum assured per annual premium, etc., you need to somewhere spend 5 lakh rupees, which is the gross pre-tax income of this person. So my submission is, this is a different problem, that we're trying to solve. The genuine life cover or the health cover is a different problem. It's not an investment problem. It's a different problem. And this problem will require a lot of imagination, I don't believe the private sector alone or the insurance industry alone will solve this problem, because the consumer is not convinced. Otherwise, they would have bought these plans. There are lots of companies providing these plans already. Now I'll come to what the next 10 years hold, in my humble opinion. I think in the next 10 years, this 70 million people I'm talking about, 70 million families, is going to become about 150 to 200 million families. That's the nature of our country. More and more people will enter this middle income, and we don't want it to become the missing middle, clearly. And these will be aspirational people. What does aspirational people mean? How many people during COVID wanted to go to institutional quarantine? The biggest fear was not COVID. The biggest fear was actually institutional quarantine for a lot of people in the middle class. I think what I'm saying is, in India, the middle class is defined as somebody who does not want government hospital services, who does not want government school services, who wants to kind of branch out on their own. And that is no offense to the government. I think there's a huge task to be done by covering 500 million plus people who are in poverty. That's a huge, massive task to be done. And the middle class has the means to cover themselves, but they need to be convinced. And of course, the insurance industry needs to have a lot of incentives to be able to do so, because it's a massive act. It's a massive action which will require pretty much the entire industry coming together with government support. See, today we still have high taxation on products like term insurance, health insurance, and we have pretty much the same incentive for term insurance as we have for investment products. I know the government is in need for long-term investment, and that must happen. And I also know consumers need it from a pensions perspective. But this area, somewhere in my humble opinion, gets lost from an overall viewpoint. And this missing middle stays the missing middle. And I just want to share a very small story. My mother's sister, recently had she's a retired professor's wife. She was actually crying at a temple because she says, in this old age, they had planned for pension. They hadn't planned for health costs. She said, how will we handle this? Now costs are coming at 5 lakh. They go to a hospital, it's 25,000-30,000 rupees a day. And I felt very bad about the situation. I think all of us need to come together. It's not about digital. It's not about digital or Policy Bazaar or LIC or any other insurance player or the government. This is our joint responsibility to solve this problem. I think we as Policy Bazaar have, over the last 12 years, 13 years, spent more than 1,000 crore rupees trying to educate the people on the need for health insurance and life insurance. We made some dents. If you look at the industry 10 years ago and today, I think the fastest growing parts of the industry have been health insurance and term insurance. They are about 20 times to 30 times larger than they were 10 years ago. So we are a very small organization. We've done some part in it, but we need a lot of help. It's like a child crying out for help from everywhere. And it does need that help from everyone, because the child has probably seen a problem and is trying to address it alone. But it needs a lot more support. And I think I just kind of leave it there, and very happy to take any questions. But that's really what we are about.
Thank you so much. Thank you so much, Mr. Daya, for explaining all about your perspective on this. And I can see a lot of questions coming in, and we have Mr. Shailesh Haribhakti back with us to conduct this Q&A session. Over to you, Mr. Haribhakti.
Thank you, Ritika. Mr. Daya, that was such a heartfelt address. And the way you put it made all of us open our hearts to the central problem, which is that all these years, all our investments have been in sick care, and very little has actually gone into healthcare. And it is because we faced for the first time in our lives a pandemic that we realized what a pandemic which comes and attacks the most vulnerable of us can do in terms of destruction of the entire capital of families, entire capital of people who just cannot afford that to happen. So you have touched the raw nerve of the one word that has come to all of us during the pandemic: collaboration. And your fantastic and passionate plea that all of us need to come together to create that vast pool, to create that massive ability for that pool to take care of these families which get impaired. But the bigger question really embedded in your plea is, how do we move from sick care to health care? How do we make sure that people will remain healthy, and when they fall ill, it will not destroy them financially? So, and what you have done and demonstrated as Policy Bazaar is incredible. You have made the ability to access insurance so democratized that today, with just one access to your site, people can buy the least cost, most effective, best coverage insurance that is available. And you have actually put all of these options so beautifully together. So it's really very admirable what you have done, and I'm a great admirer of the way that you have facilitated and through collaboration made insurance accessible, available, and sensibly taken by so many people in our country. Congratulations to you for the work that you do, and keep doing this phenomenal work. I have only two questions for you then, because I don't have any in the chat box, but let me ask you two questions. There is a company called Lemonade in the United States, which has completely disrupted the insurance market by making it possible for people to write out insurance in 90 seconds and make sure that the claims, and with far more data sets than anybody ever collects anywhere else outside the Lemonade framework, and make available the claim even faster. So by the time they realize that an event has happened, they are proactively looking at who needs to receive the insurance. It's a property and casualty insurance company, as you are aware. And the money is credited to the bank account. Are you seeing that kind of a disruptive change coming sometime soon in our insurance sector?
I totally see that, sir. And I totally believe, so first of all, we are already seeing it. There are companies which have started in India. We speak less about them, which pay out on a travel insurance claim before a customer claims. If you've bought a flight ticket and the flight gets delayed by more than 3 hours, they have the data automatically. They don't need the customer to claim. Absolutely. And so the money reaches the customer's account automatically. So I think GoDigit has done that. A few others have done that. All I'm saying is this is well within the reach of all Indian insurance companies. As Vipin sir said, the technology already exists. We have the ability. Now the issue is, this is where the data already exists. Now there are areas like health insurance and life insurance. Why do we have to take time to pay the claim? There is an investigation process that happens. Because, sir, insurance is a product where a customer can pay 100 rupees and take away, a lot of money, maybe 10 lakh rupees, etc. And it's the 2% fraudulent consumers who cause a problem for the remaining 98% and make insurance unviable for the remaining 98%. And thus that 2% has to be weeded out. Now, there are two ways to weed out the 2%. We in our lives also go about work every day. We deal with people, we hire people, we get married to people. Sometimes that will happen 2% of the time, we'll get it wrong. Or maybe 10% of the time. So my point is, digital and life are not very different. But we live with those decisions, right? And thus, before taking those decisions, we take a little bit of care. And the company you speak about has got their claims ratios down from about 400% to about 77% through learning of how to take that care, right? And I think the same exists in India as well. Now, coming to one very big opportunity there, especially in health insurance, the largest number of claims, and arguably the one place where a lot of declaration, misdeclaration, etc., can happen. I think with the National Digital Health Mission coming in, and with the health ID coming in, a lot of health data is going to become available. And through that, see, all the insurance policies, the legal parts are already digitized. There is nothing, there's no gray in them. They are black and white. And so the digitization of insurance policy, the digitization of bills, the markup languages that connect all this, there are large-scale projects happening on this through collaboration, where the industry, along with tech players, along with the government, are coming together and creating a platform for auto-adjudicated instantaneous claims. So when you check out of a hospital, you don't deal with the claim. The claim has already happened, right? You don't have to make a claim. Why do you need to make a claim? Why do you need to fill up a form? We already know you've bought a policy, what policy you've bought, what's covered, what's not covered. We already know what the bills are because the hospital has shared those bills. Your health ID is connected. All that has to be done is you have to pay for the parts that are not covered for whatever reason, for which coverage you have not taken. And for that, there may be EMI facilities available depending on your credit situation, etc. But that entire infrastructure is coming up. My view is this will transform the confidence consumers have on the healthcare insurance industry. And as that confidence transforms, that 10% will go to 90%, because there is no reason for those people not to buy, except for the fact they don't think they're supermen. They somewhere believe that the claims process is painful.
Absolutely. Thank you very much. I will now hand it back to Ritika to get our finance secretary in. If he's already there, we are beyond 5, so hopefully we should have him with us.
I'm afraid, Mr. Haribhakti, we still don't have it with us. I'm told that he's expected any moment. His office is online with us. So it's great to announce that we'll have him soon because he's coming in from a meeting with the finance minister himself. So as soon as he'll come in, we'll take him on. For now, thank you so much, Mr. Ashish Dahiya, for sharing your perspective on the opportunities and the big shift in the insurance sector as you see. And of course, to you, Mr. Shailesh Haribhakti, for conducting all these Q&A sessions in such an interactive way. You're truly an inspiring leader, not just for us, but for the entire boardroom community. Thank you so much for once again sparing time and being so interactive with your sessions. Thank you.
Thank you very much. Bye-bye.
And now moving on, ladies and gentlemen, as I just pointed out, that we are expecting the finance secretary any moment. But before that, we would like to move on to another very important keynote session on preparing the financial services sector for future both opportunities and challenges. This, of course, is a big theme of our edition today. And to throw a little bit more light on it, on the 4 areas and the challenges and the opportunities ahead, we are now being joined by Mr. Ravi Krishnamurthy, President of SBI Life Insurance Company Limited, who's going to be delivering a special address on reimagining life insurance industry. Professional with over 37 years of experience in building profitable BFSI corporates, is recognized as a thought leader in emerging areas such as technology, operational excellence, and quality in industries. He's certified by the Indian Institute of Bankers as well as the Indian Institute of Insurance. A very hearty welcome to you, Mr. Krishnamurthy.
Good evening, Ritika. Thank you so much. And distinguished panelists who have spoken before me. It's been really a very enlightening session so far. I think there are 2-3 very key aspects which are emerging now, almost coinciding with the end of the COVID era. The COVID era only accelerated the awareness about digital transformation and customer need. But almost coinciding with that, 2 major events have happened. The Life Insurance Corporation, the biggest entity, along with distinguished private players in the life insurance industry and the online players like Policy Bazaar, have made tremendous amount of efforts, both on feet as well as on the digital era, to reach out to customers, to prospects, and educate about the need for financial soundness beyond a bank balance, to go beyond the bank balance and to cover themselves for their future. But the COVID era brought an increased awareness in the customer that he needs to buy insurance. So far, life insurance was a need which had to be sold to the customer. But today, the customer is also moving towards buying life insurance, and that you can see very well because of the multiple opportunities through which customers are now buying life insurance through retail agents, through bank insurance channels, through the digital online space. All the spaces are now being utilized by the customers. So therefore, I believe that the future for the life insurance sector lies actually in building strength in governance. Because life insurance contracts as well as general insurance contracts are long-term contracts. Many a time the customer doesn't live to see the benefit of the policy itself. The nominee gets the benefit. The customer buys the policy, but the nominee gets the benefit. Such being the long-term nature of the contract, the trust element is very, very important. And here, the trust of the shareholder, because now we are talking about IPOs, the movement of FDI into the insurance sector. So the trust of the shareholder, the trust of the policyholder, and third, the trust of the distributor. All the three elements have become important. And that's why the insurance sector has to ready itself to building strong governance internally to ensure that the size of the industry is grown. We spoke a lot about the potential in the industry, but the gap that still needs to be covered will be covered only if some of the key governing questions are answered coherently by the life insurance industry. Number one, how are we going to reach the prospects? The prospects have an interest, no doubt, to buy, but how are we going to reach out to them? How are we going to scale up the distribution? There is a tremendous opportunity, friends, here for employment also for a lot of distributors who get an opportunity to earn as they penetrate and as they cover lives. But how are we going to reach out to the prospects means how are we going to build a strong, stable, deep distribution system which covers the geography of the country, not only in terms of scale, but also in terms of quality. Now, in this business, quality is extremely important in all the aspects because there is trust involved. Quality in the way the product is offered, quality in the way the policy is issued, quality in the way the services are offered post-issuance, quality in the way the persistency of the policy is maintained, and finally, quality in the way the returns are given to the customers and the way we manage claim settlements. In every area, quality matters. And in order to do this, it is very, very important that people, the governance of the sector starts examining how do we build strong, robust training systems to educate the distributors so that they are able to offer the right solution to the customer. The customer has a need for life insurance or general insurance, but he's confused about what to buy and what is the appropriate product to buy at which age. And that is why it is very important that we invest sufficiently in the education of the distribution system to make sure that the distribution system is strong, well-trained, and is able to offer good solutions. We saw when earlier speakers spoke about standard products already now coming in from the regulatory authorities through the life insurance companies, which means the life insurance companies will be expected to now innovate, customize, offer different riders, different hybrid products, a mix of life and general products possibly, and making sure that the customer exactly gets what he needs at that particular point of time. The second most important aspect after distribution is to how do we improve the selection of life And how do we make sure that we are able to offer pre-assured products to the customers by improving our understanding of the customer's demographics, by improving our understanding of the various data sets relating to the underwriting, so that we are able to, within a very short span of attention of the customer, be able to offer the right product so that he gets the best customer satisfaction over a very long period of time. The long-term careers of the distributors, the long-term careers of the employees in the insurance industry are also linked to the long-term contracts of the policyholders, because the servicing of the needs of the policyholders will be dependent on how long the distributor stays in the system and how long the employees in the industry stay in the system, which means it is extremely important that the HR and the training needs are also governed properly, so that we are able to ensure that the right set of education, right set of motivation is given to employees, so that over the long period of time, they're able to satisfy the customers. And then finally, how are we going to govern defect-free processes, zero-defect processes? How are we going to bring about innovation in our offering? How are we going to use the technology? There is a lot of technology available, but how are we going to use that to come with innovative offerings and make sure that the various facilities available to us through modern technology is used to offer customized offerings to the customers? And not only customized offerings, to lower the cost of processes, to improve the productivity so that the returns are maximized to the policyholders and to the shareholders. So there is a lot of governance involved. And the other most important aspect of governance is risk management. The whole of life insurance, the whole of insurance itself is about risk management. And risk management centers around, finally, improving productivity, improving persistency, improving predictability of the underwriting that was done at the time of sourcing the customer, and then finally, improving the consistency in service and improving the consistency in the claim settlement process. So these things require a proper governance framework, and I see a lot of opportunities for independent directors to contribute to the boards of the insurance industry, so that the insurance industry benefits from insights coming from an outside-in perspective. And both innovation, scale, and sustainability are harnessed through our very powerful technology-linked human resource system that is available in this country. This country is extremely fortunate to have some of the best demographics, some of the best HR manpower, which not only works for the country, but worldwide, we are famous for our HR talent. I think the era for the future, post-COVID era for future, lies around our human resources and human resource development, harnessing human resources for innovation, scale, sustainability, ethical selling, and prompt servicing. That is the governance framework which we need to do, because we need to move from profitability to value, from value to ESG indices. And the future lies in ESG indices, and the fulcrum is going to be how companies are going to govern the growth of the embedded value. Sure, embedded value has to grow, but how that growth will happen? How will we grow while taking care of the quality of governance in the insurance industry? So I see a lot of opportunities for independent directors and nominee directors, shareholder directors in this sector, because that is where I think the future lies, because ultimately the market is there. How to govern this market, how to make sure that we deliver justice to the society is extremely important. Thank you so much, and I wish the seminar the very best.
Thank you so much. Thank you so much, Mr. Ravi Krishnamurthy, for sharing your thoughts and your strategic perspectives and opening our eyes to the opportunities that you think wait for the board of directors in this sector. Thank you very much for sparing time. And now, ladies and gentlemen, the time has come when we have our guest of honor with us. I would like to introduce him as one of the most sought after transformational leader come reformist and a key member of the Union Budget 2021, which has been designed to give impetus to self-reliant India aimed at inclusive growth, driving double-digit growth for the economy and generating employment. Mr. Debashish Panda, IAS Secretary, Department of Financial Services, Ministry of Finance, Government of India, is here with us for his keynote address on preparing the financial services sector for self-reliant India and inclusive growth, role of board of directors. We are very, very pleased to have him here join us. He brings with him more than 3 decades of distinguished service. He's worked in various capacities within the government of Uttar Pradesh and government of India. We are very privileged to have him with us to deliver the guest of honor keynote address. Very, very honored to have you, sir, Mr. Debashish Panda.
Hi, namaskar. So first of all, let me thank all the organizers of this conference and my again namaskar to all the distinguished delegates at this conference. Thank you for inviting me, and we are just through the in the midway through the budget session right now. So therefore, my apologies for not being able to come in as per the slot that was allotted to me. So my apologies for that. So let me just begin by saying that I think these are great times for the financial services sector. If you have closely watched and observed the various announcements that have been made in the budget, and the last few years, the kind of reforms and the kind of growth that the financial services sector has seen is definitely very, very encouraging. So I would begin with to look at the financial inclusion sector in the country, where there has been phenomenal growth in the last about 6 years. People who didn't have a bank account today, more than 41 crore men and women, mostly women, have joined the formal banking system with the opening of the Pradhan Mantri Jan Dhan Accounts Yojana, PMJDY Yojana, which we call it very popularly. Similarly, those segments of the society which are the bottom of the pyramid, today they are all covered with a micro insurance scheme, and more than 30 crore people are insured either with a life cover of coverage of 2 lakhs of rupees or with an accident cover up to 2 lakhs of rupees. So what I'm only trying to hint at is that we have tried to bank the unbanked. We have reached out to those segments who were not secured, so we have tried to secure the unsecured. And also through a flagship program, the Pradhan Mantri Mudra Yojana, also trying to reach people to bank, to fund the unfunded. So these are the 3 pillars in which this financial inclusion started in this country in somewhere around 2014. And there onwards, it has not looked back, and it has grown from strength to strength. And today, this 41 crore accounts have a bank balance of all cumulatively put together more than 1,30,000 crores. If you look at the banking infrastructure, that has also grown within a short span of time. The banking correspondents, which are popularly known as the banking mitras, is a case in point, and every village within a radius of 5 kilometers, there is a banking outlet, either by way of an ATM or a bank branch, a brick and mortar branch, or a banking correspondent. Now, the banking correspondent is fully empowered to render a variety of services, opening of banks, remittances, payments, updating their bank accounts, and so on and so forth. And they're all digitally connected through the Aadhaar-enabled payment systems. So over a period of time, if you look at the payment systems in this country, the UPI is a case in point, and a lot of countries are showing great interest to learn from the experience of India, not alone the journey of financial inclusion, but also as far as the digital payments are concerned. So now what has happened over a period of time is that today we have more than 130 crore bank accounts, a similar number of mobile users, and almost 130 crore Aadhaars have been generated. So, which we popularly call this as the JAM Trinity, the Jan Dhan, the Aadhaar and the mobile. It's like a digital pipeline which has been laid so that all the benefits that the government intends to put directly into the hands of the beneficiaries now able to flow within a few hours. I put money into their account in the morning, evening they have their bank accounts updated, they receive an SMS and they are able to draw that money. This was not something we had thought so 6 years ago that this could be possible. So with this strong digital pipeline laid, I think we have to now build on from here in trying to empower those segments of the society which are productive, who can really contribute in a big way to the economy, more so the women folk, who can really be a key contributor for the growth of the economy. They have to be further pulled up. So a variety of interventions by the government, the self-help group program, the Pradhan Mantri Mudra Yojana, the Stand-Up Yojana, all attempts to reach out those sections of the society by way of providing them livelihood and income generating activities. And a number of such initiatives is also backed by an interest subvention, thereby making the credit availability at an affordable rate. And I'm very happy to also share with you that all this have shown wonderful results, and particularly during the COVID, the real test was that how we could transfer money into the hands of women PMJDY beneficiaries, the Kisan, the Pradhan Mantri Kisan Yojana. So the money is actually reached them when they needed it most. My only the submission here is that financial services are in for a great time, and there is so much of technology, whether it is artificial intelligence, the blockchain or machine learning, and the fintech. The fintech is something which is so exciting, and there are so many innovative technologies coming into the space of fintech, whether it is banking or insurtech, whether it is insurance, is something I think all the participants today should take note of. And how do we onboard them in order to, not only to grow your own businesses, whether they are insurance or banking, but also help the economy grow, the country grow, and the people have a better, livelihood and better income generating activities. Now, the public, I'll just touch upon first of all, the public sector banking system, or overall the banking system. Overall, the banking system in the country has been, quite stable despite the COVID. What was being earlier projected that there will be serious trouble for the banks. And those outlooks from time to time have been corrected by the various rating agencies, by the analysts, and even the central bank also, based on whatever projections they had made initially, and also a further assessment of the stress scenario, they've also made corrections. We hope this trend continues and the banks or the financial system in the country continues to be stable and robust and render services to the country. So now the interest is at an all-time low. So that is a great opportunity again, for businesses and for private investments to come in, and thereby, the multiplier effect on the economy. Infra development is something which is a topmost priority of the government, and we have a large infrastructure pipeline, which we call the National Infrastructure Pipeline, of 100 lakh crores of projects, which we want to, implement in the next 5 to 7 years, for which the budget announcement has clearly stated that a new institution, the Development Financial Institution for Infra Financing, is something which we are going to quickly, establish. So this will be backed by a statute, and what it will do, this National Bank for Infrastructure Finance will not alone provide the financing and various kinds of innovative financing, but also play a major key developmental role. What I mean by developmental role is help any entrepreneur or a contractor or an investor to do their project structuring, to do the financial closure, whether it is a road project or a highways project or a freeways project or a port or anything for that matter, which is in the ambit of infrastructure, so that they are able to quickly get their financial closure. And we expect that a lot of funds, patient capital, which are not finding appropriate avenues to invest. Say, for example, the insurance fund, which is a long tail patient capital, which you invest here and there. So I think they will have an avenue to now invest their money in infrastructure projects through this national bank or otherwise. And similarly, the pension funds, also a huge funds, size of fund that can also be invested, sovereign wealth funds, and a variety of other funds can come, and this country is looking at infra push in a big way. And this is one of the announcements which we are going to implement very quickly. The other important piece as far as insurance is concerned, again, insurance has seen a lot of traction. The insurance penetration has also, which was about 7-8 years ago, in the range of 2.2, 2.3%. Today, it's gone up to 3.7%. Both in the life and non-life has seen growth, but there is plenty of opportunity for it to grow further. A large segment of population are still not able to, they do not have an insurance cover. LIC has been the leader, and as you all understand, know that LIC is also going for a listing. And I'm sure with this step of the government, the LIC will be able to they will have a better governance structure and at the same time enhance value for its shareholders, and they will continue to grow further. So insurance penetration and density is something we should very closely watch, and that only suggests that there is plenty of opportunity for the insurance companies to grow and more number of insurance companies to come and invest in this country. So keeping that in mind, we have announced in the budget that we are going to open up the insurance sector for FDI from the existing 49%. It goes up to 74%. And at the same time, the Indian control, which was one of the conditions, is now being detached. So there will be no Indian control other than a few safeguards. It will be completely free for the foreign investors to come in, set up a new company, or put in money in an existing company, and they will be able to also have control if they have the requisite percentage of share in the insurance company and subject to the approval of the regulators. So this is again a huge opportunity, and insurance being a capital intensive one, I think with FDI, I expect that new technologies will come in. There will be better products which they will bring in. There will be better practices which will come from across the world. And lastly, it will only lead to enhancement of customer services. So the insurance sector, which I feel still has a major role to play, not only in terms of insurance penetration and density, but I think from the business point of view, from the investors' point of view, there is a tremendous opportunity. So please be on the look for the moment the Act gets amended and the notification for FDI is issued. I think the insurance players should be keenly watching, and they should grab this opportunity of investing in the insurance companies. Now, as far as pensions concerned, which is also one of my subjects, pension, we have a regulator now, a full-fledged regulator for pensions, which is the Pension Fund Regulatory Development Authority. And we have something called a national pension scheme, and which is available for the government employees and also for all citizens. So that is also something we are now going to strengthen it further. And today they have a corpus of more than 5 lakh crores with a annualized return of more than 10 to 11%. So pension is also something where I think has great opportunity in this country, given the size of its population and given the demographic features. So in order to make the people less dependent on the state and rather be on their own through a pension scheme is something we are looking at, and a number of initiatives have been taken by the government to provide some kind of succor as far as people to join the pension schemes, like a case in point again is the Atal Pension Yojana, where a small amount of subscription is made and a monthly payout of a fixed amount, which is guaranteed by the government, is provided through this scheme. So the banking system, the insurance system, and the pension system is in place with regulatory bodies. And I would say that a lot of stability comes by way of the systems that have been put in place, and therefore the investors' confidence also gets enhanced that we have a strong and robust system in this country, and therefore they should be, very much enthused to come and invest in a country which not only has a market, but also it has a huge potential in terms of growth. So I think I'll stop here with these initial remarks. If there are any specific questions that somebody would like to raise, I will try to answer them to the best of my ability. Thank you.
Thank you so much, Honorable Secretary, for throwing light on the tremendous opportunities that lie ahead in the financial services and insurance sector. And yes, we have a whole lot of questions, but to conduct this very special Q&A session, I would once again like to request Mr. Shailesh V. Haribhakti, FCA Chairman, Western Region, IOD India, and Board Chairman, Audit Committee Chair and Independent Director on multiple boards in India, and Chairman of Shailesh Haribhakti and Associates India, to please join me back, an ardent supporter of IOD in all its endeavors for many, many years. Welcome back, Mr. Haribhakti, and over to you for this very, very special Q&A with our guest of honor.
Debashish ji, what you have given us is a fantastic picture of inclusion. Mr. Ravi Krishnamurthy finished his remarks talking about ESG matrices. And we at IOD noticed that your budget this year had a full stamp of the 17 SDGs and the whole ESG framework and the sustainability ideas that are now receiving so much international interest. So the first question is, how much of the budget thinking and the policy framework going forward is going to be influenced by ESG thoughts? And the second question is that in all of this infrastructure that has been created, and our compliments to the fact that we've been able to send out relief under the DBT scheme, as you rightly pointed out, instantaneously to millions of people in our country. I think this is unprecedented, and India leads the world in these kind of inclusive population scale processes. But there are two other aspects of the financial system, which is payments, which is dependent again on UPI, and the currency, where the big debate going on today is between fiat currency and digital currency. And we would love to hear your views on both these issues, the ESG issue and the payments and the currency issue.
Okay. So just coming to the last one first. See, the cryptocurrency, which is now a matter of, which is being debated every day in and out, it has an underlying technology. So obviously, and in an interconnected economy, interconnected world, we cannot isolate ourselves. So we have to bear that in mind, that some way or the other it is going to hit us. But secondly, this is something, and the concern, from the regulatory point of view also, that it doesn't have an underlying asset. So how can you recognize such a currency? So there's a dilemma here. But nevertheless, what I would only like to point out at this point of time, that we are fully alive to what is happening around the world and how this kind of currency is gaining currency. And a lot of countries are also, carefully thinking through, and some countries, I think, have started regulating this particular issue. Because unless you regulate, then in this country, there are a lot of naive population who can be, cheated, duped, and there could be a variety of other fallout of that. So I think I'll leave it at that yes, the government is very much alive and aware about this whole issue of the cryptocurrency and its growth and its advantages and the disadvantages, everything. So some experts are already engaged into looking at various issues as to how to deal with it. So I think we'll share all the details at the appropriate time when we reach that point.
Thank you.
And as far as the overall, whether it's the Millennium Development Goals or whether it is the social and economic development of the country, I think the government is totally focused and not losing sight of, while on one hand, as I said, infra is something if we don't have the world-class infra, then we cannot grow to what we are aiming at a $5 or $10 trillion economy in the next few years. So whether it is highways, whether it is railways, whether it is roadways, or whether it is new townships with the most modern amenities and infrastructure, whether it is power, renewables, or with a high-speed rail, all this are very, very essential for an economy like ours, which is an emerging economy and with huge potential and promise. So that is one part for which we are trying to, create institutions, trying to deepen the bond market, trying to instill the investors' confidence. So wherever required, we are coming with a government-backed institutions and leaving scope for the private sector also to chip in and welcoming them. In fact, we are also inviting the private sector to come within this framework of what we are creating to establish a development financial institution for infra financing. Now, as I said in my opening remarks, a lot of social interventions are also being made, whether it is education, the new education policy, the health sector. You would have seen the entire COVID, how the public health system and later on the private also chipped in. Today, we are the lead as far as the vaccine is concerned in terms of manufacturing and also providing the vaccines to our neighboring countries. So that itself speaks in volumes. And the way the COVID has been managed. And then if you look at the coverage of the poor who were earlier didn't have access, the insurance is a case in point, the Pradhan Mantri Jan Arogya Yojana, the Ayushman Bharat. For the farmers, we have insurance by way of the Pradhan Mantri Fasal Bima Yojana, again trying to take care of the Annadata who provide us the grains, so that they are covered, their production risk is covered, and also their the marketing risk is covered by way of the minimum support price. So, and reforms have been also carried out in the farm sector recently. So, all of this are, I think, attempting to reach, where everybody is looking at, and India, I think, is very much on that trajectory. And the COVID, in fact, was a bit of a dampener in terms of we lost this 1 year. But then I'm sure you would have seen the economy also bouncing back. And I'm pretty much sure that, we are back again in the game now.
Absolutely, sir. What a great level of confidence you have raised in the minds of international investors on this particular webinar and in the minds of all of us in corporate India. I think this is the kind of signal that all of us wait for. And we are deeply thankful to you, full of gratitude for the extraordinary budget that you have given us this year. Now it is up to us. We will all work with you to make sure that India becomes the fastest growing economy in the world. Thank you.
Thank you. Thank you.
Thank you so much, gentlemen. Extremely insightful address followed by an even better Q&A session, extremely interactive and such thoughtful questions being asked and light thrown on the various aspects and the opportunities ahead and a lot of hope coming out from this session. Thank you so much. A truly transformational leader and reformist, Mr. Panda here with us, and a very important member of the Union Budget Team 2021, which we are all looking forward towards creating a self-reliant India and, of course, looking at fulfilling the inclusive growth that we're all talking about. Thank you so much, Mr. Haribhakti, yet again for sparing your time. Thank you, Honorable Secretary. Extremely honored to have you today. Thank you. And I move on, if we could have a virtual round of applause for this session, please. Thank you so much. Thank you.
Thank you. So I sign off. Thank you so much.
Thank you.
Moving on now to our next distinguished speaker, that's Mr. Sharad Mathur, Managing Director and CEO of Universal Sompo General Insurance Company Limited. He will be sharing his insights on riding the wave of digitization with the digital-first approach. In his 24 years of rich business experience, primarily in the general insurance industry, he's held very important portfolios and positions in major insurance companies. A very warm welcome to you, Mr. Sharad Mathur.
Thank you, Ritika, and greetings, everyone. I thank IOD for setting up this insightful forum and providing me an opportunity to share my thoughts on digitization. So as we see around, it is all about digitization now. Customers are changing their behavior faster than firms can evolve. So digital is actually becoming a lifestyle, or actually has become a lifestyle already, and it is no more a mere technology. Just to cite some examples, today customers are living in a digital, sort of living a digital life, as we see the omnipresence of Google, experience of Uber, immediacy of Twitter, relevance of Facebook, and content of YouTube, and so on. So customers expect firms to support their digital life rather than simply providing a financial product or an insurance product. So it actually creates a need for organizations to reimagine their business model, processes, and technology around the customer's digital lifestyle. So this also means that revenue for insurers and other BFSI entities or any organization across sectors will going to get generated from connected devices and not merely from products anymore. So look at the shift. It is not only the usage or consumer pull kind of a thing, but also commercially there is a big shift which is happening and which is making digitization a necessity for entities which have legacies. So they have to digitize, and for entities, businesses which are getting set up afresh. So for them, it is like digitalization. So everything has to be tech based. So and board of organizations, insurers, I know for sure, and banking as well, have already started strongly supporting complete digitization and digital transformation agendas commercially, and in terms of time that it takes for entire process from approach to the entire strategy, which gets devised, to planning and the implementation of the whole digital framework. So boards are supporting big time. And it is not only organizations, commercial entities, but we see our government Digital India program with broadband highways, universal access to mobile connectivity. And we see that around, if I remember correctly, some 44,000 uncovered villages nationwide with mobile access, public internet access, so and so on. So it is government which is playing a pivotal role, creating a big digital framework countrywide, and organizations are doing and will continue and will have to rather do their bit. In case they want to succeed, they need to transform digitally. So in insurance sector, coming down to insurance sector, nearly all insurers have launched digital initiatives. For example, using new technologies to address current pain points, setting up customer portals, or digitizing individual services, or enhancing their analytics capabilities, because analytics again becomes fundamental as we build business even on tech devices. So insurers are working very hard to achieve acceptance of digitization within the organization. So why it is critical, acceptance of digitization? Because many organizations or many people, if you see, they set digital as an objective to be achieved. But then till there is a buy-in enterprise-wide, in terms of all employees, all internal stakeholders, external stakeholders, channel partners, vendors. So it would not be adopted your digital assets would not be adopted, may not be used, and there would be no integration between digital assets which are created or digitization which took place and users. So things will fall flat. So it becomes critical from this viewpoint that it has to be with a proper buying enterprise-wide, and which is creating a need for big cultural change. So insurers are working to gather momentum, attracting digital talent, and so on. Yet we see the end point still, to some extent, is unreachable. In many organizations, to a larger extent, is unreachable, and many entities which have progressed brilliantly and rapidly, but still they feel that there is a gap. And gap clearly is because, as per our analysis, two key challenges which board also faces when they either sanction budgets or they give their nod for complete digitization, or even if many organizations, they seek assistance of big consulting firms. Everything is perfect, but two hurdles which are being seen are legacy systems. So these IT legacies include our inflexible IT systems and infrastructure with non-standardized interfaces and duplication of core and peripheral systems. So critical. These things create complexity and they slow down the digital transformation. So where, in spite of all efforts, in spite of all sanctions from the board to the management, in spite of all inclusive efforts with consulting experts, there is a gap which exists in the current times. Second key challenge is product legacy, because product complexity hinders digitization of processes and implementation of new IT systems. And to my mind, this actually is the greatest yet least recognized obstacle to scaling digital initiatives in insurance. So if these two issues, or as these two issues get addressed, digitization is going to become a reality. And as we see in most matured markets where it is a complete digitization, maybe because they are a little ahead from us, India is fully geared up and fairly competent in terms of beating them. It is just a matter of time addressing these two challenges. Again, some basic solution which we have adopted or in the process of adopting, and I have seen many organizations, that there is a clear need when any digitization or big digitization project or digital transformation is happening in any organization. So there needs to be a structured framework. And if there is a structured framework for digitization, then successful implementation is for sure and enterprise-wide. So it can be, I'll divide this into three compartments. So any organization starting a digitization process. So what is necessary as step one is piloting new customer journeys, which is an ideal point to start the overall process. And customer journey pilots have immediate customer impact without an iota of doubt. So insurers should begin with the most important customer journeys, and that can be based on number of transactions, which again might vary from entity to entity, but this remains a key decisive factor. Number of transactions that should be picked first, and then expected efficiency gains or qualitative criteria such as impact and organizational buy-in. So it should be a decisive factors when customer journeys are picked up. And step two, picking up a clue from what I was trying to share earlier, is transforming the operating model. So transformation of operating model should be undertaken even as the implementation of new digital customer journeys is taking place. So that becomes very important. So I'll just cite an example. In insurance sector, agency distribution channel plays a pivotal role in terms of its contribution to the overall GWP and also in a way its contribution to GDP of our nation. So the agency channel is a very, very strong force in creating revenue for the sector. So the paramount need is to develop a new channel strategy under entire digital umbrella. So new channel strategy must address channels concerns by keeping them in the loop on digital interactions, which normally we see that when I was making a point, employees, I added external stakeholders. So when any digitization, whether of any process may not be directly linked to external stakeholders like agents here, they should be kept in the loop. And then it becomes more inclusive. So providing them leads and cross-selling opportunities, they should not feel that now company is doing disintermediation. So that again leaves a gap. And when digitization takes place, so legacy has to be included, considered to remain addressed. When agents generate new business, have clear rules for commissions depending on the channel from which the new business comes. So this makes it very, very inclusive. And so finally, companies that are able to offer customers free channel choice need to make processes and user experiences consistent and data transparent across channels. So this way, it becomes more inclusive. And even currently in manual processes also, agents are being provided leads or cross-selling opportunities, commission is being taken care of. But when it becomes a part of the whole digitization process, so it becomes more inclusive. So this is remains fundamental, and this is the reason that I'm trying to reiterate some of the points. So third key element, once the entire business framework is well integrated, then keep adding new customer journeys, as it is not a one-time process. And since there will always be new customer expectations and demands, so new technologies and new competition requiring customer journeys to be continually adapted and improved. So this is something which should be a continuous process. Digitization is not something you do it in one go and then it is over and will going to remain limited to that. It is a major transformation which happens, and then there has to be a continuous addition of new journeys because macro level or even internal competition, market, everything is evolving and very, very rapidly. Some of the other key pillars would remain artificial intelligence, which is being developed for most of the business elements in entire insurance space, whether it is customer servicing, policy issuance, or claim settlement, reporting of claims, intimating customers, various stages of claim settlement. Also, there is a need to have artificial intelligence for each and every customer interaction that is available, because more and more AI means it is not only bringing efficiency in the processes, but also it is cutting time. So it is cutting TAT, which is very, very good for our customers. And as our Honorable Secretary, Mr. Debashish Panda, made a mention of financial inclusion. So I say that there should be insurance inclusion as well. And if we make it good for our customers in terms of best TATs, in terms of best experience, joyful digital journeys. So insurance inclusion is not far. And our country, where health penetration currently hovers at about 35% on a 1.35 population billion base, it has to be at least 70%. Because if I draw a comparison with countries like Vietnam, which is not so developed, they're also including government schemes. Okay, on a small population base, health insurance penetration is 70% plus. Or in a matured market like Australia, it is about 55, 60%. So there is a lot of potential. And digitization is one big and strong lever for us to have solid insurance inclusion, give protection to our population, and to have commercial and process efficiencies, win-win for board management of organizations and for our customers at large. So another thing which is coming to my mind is big data, which would play a key role. Insurers are thriving on big data, and big data will be a driving factor behind the success of 5G as we are graduating to 5G now. So these are some of the thoughts from my side on digitization and digital first approach. So I'm open for if some questions there.
Yes, indeed. We have questions to Sharad Mathur. I would like to take up two questions actually, and I would like to list them out together. The first question that has come in, it says that how can digital change be driven through the boardroom? And the second question for you is, how is digitization different from digitalization?
Okay, thank you. So how digitization is different from digitalization, I'll take this as first because it is basic. So in a contrast to digitalization is turning existing non-digital processes into digital ones. So I'll cite one basic example outside insurance. Like instead of creating an e-commerce store, which is digitalization. So digitization is using a cloud-based accounting system to replace a paper filing system. So same system, same process, but digital too. So this is a basic difference between digitization and digitalization. For existing businesses, for entities which are into operations, digitization is meaningful. For new entities, they can thrive on digitalization as they are setting up afresh and they have no tech legacies or product legacies. This is what, and your point number two, that how board can drive digitization is that digital change management and people is a clear driver for this. What I mean that it's the process of both implementing the changes, insurer or any organization carefully orchestrated, and ensuring that key staff throughout the organization both bought in and action the changes. So normally what happens that board sanctions budget and then rest is left to management or employees or tech teams to develop various digital assets and digitize manual processes. But where gap occurs, that internal stakeholders, employees or external intermediaries, agents or other service providers, so when they are not kept in loop, so buy-in is not that solid. So board needs to ensure, and board's involvement should get deeper alongside management to see that or to in a report mechanism that if digitization is happening, what is the involvement, how internal, external stakeholders are being bought in and involved in the whole process, in the whole journey. So this is the way it can become more effective at a board level as well.
Board of Directors for watching you right now. Thank you so much for being with us today and sharing your insights. Thank you.
Thank you so much. My best wishes. Thank you.
And now, ladies and gentlemen, before we move on, I think it's very important for me to mention that it's always been IOD India's endeavor to bring topics that are relevant to Board of Directors for discussions like sustainability, inclusive growth. But this particular dialogue series edition is turning out to be historical because Our focus has been on financial services and insurance sector, and all the well-performing organizations in these sectors are part of today's webinar. I think that's commendable. Thank you to all who are still with us here. And now with this, we move on to our next speaker. That is Dr. S. Prakash, Managing Director, Star Health and Allied Insurance Company Limited. He will be delivering a special address on capitalizing on the global evolution in the health insurance industry. A passionate medical doctor who holds an MBBS, an MS, and FRCS from the Royal College of Physicians and Surgeons of Glasgow, UK, he is the first of its kind to have 2 decades of clinical experience from India and overseas, and having more than a decade of experience in health insurance. Recently, he played a key role in implementing mass health insurance schemes for life-threatening ailments in the state of Andhra Pradesh and also in the state of Tamil Nadu. A very warm welcome to you, Dr. S. Prakash.
Am I audible?
Yes, sir, you are.
Yeah.
If you could just put your camera on, we can hear you, but we cannot see you.
Fine. Are you able to see me?
No, we're able to hear you, sir, but we're not being able to see you. If you could just put your camera on the app.
Fine.
Yes, we can see you now.
Well, very good evening to all of you. I know we are cognizant of time, so I'll just take very few minutes to brief on the global trend that particularly post the pandemic. India, as it has been, I've been hearing to the previous speakers, is a very wonderful event, and I should really appreciate the organizers of IoT for creating such a very lively and a I was hearing to my previous speakers who opportunities ahead in the insurance sector. Of course, is on the rise, and most important than all, life expectancy more than 69 years currently. Life expectancy is on the rise. And healthcare financing is of paramount importance. Particularly the people who are senior citizens. If they do not have enough money to spend, all these things can be protected by having a health insurance policy. That is the reason why I call life expectancy increasing with lot of advancements also increasing in greater opportunity for previous speakers. Less than 10% of the population employee paid group insurance. So the outer potential for market. But if you look at adequate health insurance, adequate health insurance of heart disease or cancer or a major accident, polytrauma, it requires minimum 5 lakhs to take care of the healthcare expenses. So the insurance cover should be minimum 5 lakh, and it should have the family protected, and young people should come forward to take insurance. This is our ask. But during the pandemic, globally, there is a lot of evolution. People awareness on health insurance were tremendously on the rise, and luckily we could see a surge which was marching upwards from May and having an augmented growth during August, September, October. But unfortunately, it has started declining from December. We wanted the rapid acceleration in health insurance business to continue and grow. But we had a peak during the August, September, October, but now the industry is not experiencing that rapid acceleration they saw during the peak of the pandemic. So this is about the top line. So insurance companies had very one of its kind of growth pattern in this year. In the same way, on the claims front also, the first quarter of this financial year, due to the pandemic, there were no much movements, and insurance companies and hospitals had very less financial outgo on claims. And after June, the flow of patients to the hospitals and the uncertainty in the treatment of COVID-19 and the lack of standardization of cost on the hospitals for COVID-19 and non-COVID-19 related ailments, really it created a big dent in the industry. And now the industry is facing the big hardship of standardizing the cost, because claims is a moment of truth. Claims, the power of insurance is settlement of claim. All my previous speakers were talking about 90% people not covered because of the apprehension, lack of trust and confidence on the insurers. And why? This is because of the efficiency in the claims management. So efficient claims management, passionate claims management, because each insurance comes for rescue when health is at a compromise. When the customer is in the hospital, maybe for the first time, he do not understand the nuances. He would not have heard about the policy terms and conditions. And when sometimes underwriting happens at the time of admission to the hospital, and underwriting should happen at the time of sale process while buying the health insurance. But unfortunately, if it happens during admission to a hospital, naturally the customer is put into some sort of disappointments. So here in India, with the global evolution, with this pandemic, we heard about the digital revolution. Yes, of course, there was a higher traction on website. Digital sales were increasing. People are able to book their policies at their comfort from their home place. We could see a lot of advantages happening on the digital front, on the growth front, but insurers had a struggle in 100% honoring the expectations of the customers. This is because insurers design the health insurance policy, but when it comes to delivery of services, it is not done by insurers. It is dependent on the hospitals. And the hospital should have a good knowledge of the insurance products, the terms, the policies, terms and conditions. And there should not be a design delivery disconnect. This can be addressed probably by having a separate regulator for healthcare services. India, we have worked in under National Health Services, we have worked in Singapore, we have worked in India. But what the difference we find, while the insurance sector is highly regulated, the healthcare services are not so regulated. The incidences of diseases are on the rise in India, but the payment is unlimited. Differential practices by the hospitals and lack of standardization of cost. So naturally, with this evolution, we have started practicing a lot of global strategies. We are emulating the best practices from the globe. Naturally, healthcare services also should be regulated so that we can build the trust and confidence of the public, which is very important. Once that happens, now today, health insurance is more a push market. We need agents, brokers, online web aggregators, and digital sales mechanisms to push insurance awareness and then promote selling of this product. Procurement is not so easy these days. But if this push market has to become a pull market, then there should be a tremendous increase in the service. The service efficiency should grow, and health insurance companies should 100% fulfill the expectations of the policyholders, particularly when they are in a trouble and when their health is at a compromise. So my only submission here is, due to lack of time, I'm just concluding by saying that there are a lot of evolution happening, and healthcare financials, the health insurance, supporting a person when he is in the hospital and paying for his healthcare expense is only part of their business. A majority should be to bring in healthcare reforms. how to bring in standard operating procedures in a country like India, where we have differential practices. Standardized cost. Standardizing cost is not only going to help insurance customers, it is going to help the common man and improve the healthcare economy. It can direct people to look at quality and ethical services. And how can insurers promote quality and ethical services is the way we have to watch post-pandemic. It has opened up a lot of avenues, created a lot of awareness, and we have started looking globally. And this is the time for us to emulate the best of the global practices and promote standardization of cost and standard operating procedures in the hospitals, so that there is growing trust and confidence on the insurance as a concept, which can allow insurance to grow and build this economy. Thank you all so much.
Thank you so much, Dr. Prakash, for laying out the ideas so clearly about the sector. There is one question that I would like to put. The question is asking you that what do you foresee for the future of the industry as the effects of the pandemic wear off?
There is going to be a sustainable growth, and with government coming up with FDA of 74% and insurance companies looking at avenues for IPO, which is going to broad-base the customership and enhance the governance. So naturally, there is going to be a lot of positive impact. Health insurance industry is bound to grow. The market is really bullish. And with the services, with the focus on services, we can make that to happen faster.
Dr. S. Prakash, once again, for sparing your time and being with us today. Thank you.
Thank you all. Bye-bye.
And now it's time that we move on to our next distinguished speaker, Mr. M.K. Podar, Chairman cum Managing Director of Agriculture Insurance Company of India Limited, is here with us. He will be sharing his insights on the changing face of Indian agriculture hedging risks. During his career in agriculture insurance, he was deeply involved in development and implementation of various crop insurance schemes and products introduced by the Government of India, GIC, and AICI. He has been closely associated with international research organizations, World Bank Group, and global reinsurers working in the field of climate change and risk management in agriculture. A very hearty welcome to you, Mr. Podar.
Yeah, thank you very much, Ritika. And thanks to IOD for giving me this opportunity to speak a few words about the topic is the changing face of Indian agriculture, hedging risks. Well, as far as we know our Indian economy, and we know our agroeconomic dynamics also, that most of the farmers still do their agricultural occupation almost in a sustenance mode. Of course, over the years it is changing. We have a national program of doubling farmers' income by 22-23. So that is moving in the right direction. But still, a huge number of farmers, 86% of the total farmers, farm families, they are still in the small and marginal category. Small farmers means the farmers who are having land holding of less than 2 hectares, and marginal is further marginal, who are having land holding of up to 1 hectare. So, and 86% of our farmers they belong to this category. So you understand that they are very, very low net worth individuals. And when it comes to managing risks in agricultural production, farmers, they do certain hedging practices through the traditional mode, okay? And good thing that the better alternative as a financial risk mitigation tool, which is a better option for hedging, is insurance, that we all know. Yeah, good to say that this government of India had understood this immediately after independence, and various expert committees were formed to understand the dynamics of agricultural insurance system, which can be rolled out for the very large community of farmers that we have. So after a lot of trials and tribulations by insurance companies, those days it was GIC, General Insurance Corporation, and some pilots were made here and there. Then in 1985, a comprehensive crop insurance scheme started on a pan-India basis, targeting only the loany farmers, the borrower farmers who take short-term loans from the banking institutions like cooperative bank, regional rural bank, and the commercial banks. So how it came? It came because the farmers who used to take loan, short-term loan from the various financial institutions, like what I said, that regional rural bank, cooperative bank, or the commercial bank, in case having taken the loan, their crop fails, so they are not able to pay back the loan amount, so they become defaulted. So when they become defaulted, they are not able to get the fresh loan for the next season. So which puts him into a severe livelihood risk. Okay, he's a very low net worth individual, so he loses his crop and he doesn't have any money. So he falls in the trap of the local money lenders and all, and we all know what can happen. And we are aware about the farmer suicide and all those things. Of course, that is a very another complicated matter. It's not that simple. But anyway, the government thought that to start with, let us insure these borrower farmers who take short-term loans from the banks, almost on a compulsory basis. So when you make certain things compulsory, naturally you have to see the affordability of that also. And when we are talking about low net worth individuals. So with a very small premium amount, the comprehensive crop insurance scheme started in 1985. So that went on for almost 14, 15 years. Then in 1999, the scheme format almost remained same, but the government thought that to bring the farmers who have become defaulted or who use their own fund for agricultural production, for cultivation purposes, so bring those farmers also into the crop insurance fold. And also it was thought that, say, whatever from 85 to 1999, the farmers also started their cropping pattern, their agricultural practices. They become more market oriented, some of them. So they started growing vegetables and the horticultural crops. So in 1999, the comprehensive crop insurance scheme was further, broad-based, and commercial crops also are brought into the insurance scheme. For the loany farmers, it continued to be compulsory, but for non-borrower farmer who use their own funds or funds from the other sources, not from the banking institution, for them it was made voluntary. So which means if they want, they can approach any of the intermediaries. Those days, it is basically again the banking network, and he can take an insurance policy. So that is called National Agricultural Insurance Scheme. That also started in 2000, and almost all the states, barring a couple of the states like Punjab, Haryana, and all, they did not accept because they feel that their misperception was not that much, was not that much. Agriculture was much more, immune, because a large part of Punjab and Haryana is irrigated. As of now, it is more than 90% of the area is irrigated. Anyway, it is their own decision, but other states, they accepted it. So from then onwards, this crop insurance has a strong footing in Indian agricultural system as far as this hedging and the protection of agricultural production is concerned. So after that, those days, the implementing agency insurance company was only General Insurance Corporation. But when this NAIS came, National Agricultural Insurance Scheme, came in 1999, it was made part of the scheme that in the due course of time, a specialty insurance company, specialty organization would be set up to implement this national crop insurance program. And that's how my company, Agricultural Insurance Company of India, came into being in 2003. And we took the baton from General Insurance Corporation and started implementing the National Agricultural Insurance Scheme on behalf of the central government as well as the state government who had opted for it. So from then onwards, this AICI's journey started, and as we have been carrying the flag of crop insurance, so we had a mandate also to innovate, to do some research and development activity, innovate new crop insurance product, so that a National Agricultural Insurance Scheme was a macro level, a broad product, but broad is broad. So, but insurance is much more localized. So our mandate was also to develop newer insurance product, suiting the local needs. So AICI started doing all those things, and in the process, we developed, we designed many innovative farmer-friendly products. Some of them are technology-based, like weather-based insurance scheme, which takes into account the weather data, like temperature, rainfall, high rainfall or low rainfall, then wind speed and all those things, which are directly related to the crop prospects. So AIC started all those things, and the NAIS was under scrutiny from various sectors, including the farmers' body, state governments, and all. So in between, the government thought that why not start a kind of income insurance scheme. So that also came for a very short period in 2005, 2004-5. So income insurance also was piloted, followed by this weather-based insurance scheme that I said on a pilot basis from 2007-8. And the NAIS was basically an yield guarantee scheme. Lucky for us, we had a very good, we have developed a very good agriculture statistics system, from where we come to know that in a particular administrative unit, whether it is a block or it's a tehsil, taluka, sub-district or district, we have a historical yield data of productivity data for each and every crop and how much area is under production, all these statistics are available. So those statistics also help actually us to do this actuarial calculation of premium. So in NAIS, the farmer's premium also remained flat to make it affordable for the lonely farmer, since it is compulsory. But at the same time, our mandate was to go on calculating actuarial premium, means commercial premium, so that a farmer, when farmers have been given option actually, he can choose different sum insured levels. So if he is choosing a sum insured which is more than the standard cover, so for that additional cover, he was charged actuarial premium. So it was a very good intervention. So through that process, we started developing huge amount of data and for the pricing purposes. So that's how now AIC is a big repository of agriculture statistics data. And off late, the PMFBY started, Pradhan Mantri Fasal Bima Yojana, which started in 2016, replacing National Agriculture Insurance Scheme. The format remained same. It was earlier, initially it was made compulsory for the lonely farmers, and all the field crops that we know, all the food grains, oil seeds, and horticulture crops, annual horticultural crops are covered. And it was again rolled out to all the state governments, and most of the state governments joined. And one good thing, one major change that has been brought in is that the whole scheme was made commercial. Commercial in the sense that not only AICI, there are other 17 companies who have been empaneled by Ministry of Agriculture and Farmers Welfare. So there are 18 companies who started doing this business, means this implementation of Pradhan Mantri Fasal Bima Yojana way back in 2016-17. And the premium rates are set on commercial basis, but majority of that premium rate was subsidized by the central government and the state government to the extent of 80-85%. Today, even it is more than 85%. So farmer pays a very small amount of the commercial insurance premium, which is around 10 to 15%. So it started with a objective, with the aim of covering at least 50% of gross cropped area in a period of 4 years. So from 2016-17, again this Pradhan Mantri Fasal Bima Yojana underwent many examination, evaluation, changes and all. And the penetration level of the farmers wherever the scheme is on is good. It is increasing. All the insurance companies are doing a lot of awareness, insurance awareness activity, campaigning and all. So, but there are certain trend that has been observed is that the premium rates have gone up because of the reinsurance protection which is needed for any commercial agricultural insurance proposition. So that was getting dried up. So the claim ratios also are not very much favorable in some pockets, some of the districts and some of the states. So for those states, those districts, the premium rates were going up, and going up so much it became kind of an unaffordable for the state governments. So state governments chose actually not to quit the Pradhan Mantri Fasal Bima Yojana. So it's a matter of concern. As on date, as many as 6 important states who are out of Pradhan Mantri Fasal Bima Yojana. Of course, Ministry of Agriculture is trying very, very hard and talking to the state governments to bring them back into the PMABY fold. But looking into this, since we are a specialty insurance company dedicated to carry the flag of National Crop Insurance Program, AICI during last 1 year has brought in some interventions which are unprecedented and which are really, really innovative. The one important intervention that AICI brought is that just to reduce the premium rate, we offer to the state governments that if the claim ratio is less than 80%, the claim ratio means if I get 100 rupees of premium and my claim outgo is 80 rupees, it is 80% claim ratio. So if the claim ratio is less than 80%, we will make a refund to the state government. So that gave a lot of comfort to some of the state governments. They said that it's a good thing that if the claim ratio is less than 80%, then the state gets back the money. So most of the states, as I mentioned, that they had a budget constraint. So with this offer, actually, it was some of the states actually joined, like Maharashtra, 1 or 2 districts, and Madhya Pradesh, entire Madhya Pradesh. So we are doing that. But when it comes to this kind of refund clause, naturally there has to be a capping. So we told state governments that since the reinsurance protection is drying up, so there has to be loss cap also. So they agreed for a loss capping of 110%, which means against 100 rupees of premium, if the claim ratio is more, if the claim is more than 110, then whatever is more than 110, that particular amount will come from the state government. So with this, actually a collaboration, a partnership, a risk sharing methodology started, a new thing. So it is many of the state governments are now inquiring about that risk sharing model. I think it worked well. And this is one intervention that we have innovated and then brought in. Second intervention we have brought in is that in one of the state, actually, this again, the insurance companies are reluctant to quote because of the high claim experiences. So they are actually offered that, okay, the state government can be a co-insurer with us. So in that case, when you have the skin in the game, so naturally, insurance company as well as the state government can come together and work together in terms of loss assessment, claim mitigation, moderation, and all those things. So that is the second intervention that we brought. Third intervention what we have brought is absolutely in line with what our Honorable Prime Minister says, is that using technology in agriculture insurance even. So many of you may be knowing that European Space Agency, they have started a satellite program, artificial satellite program that is called Copernicus program. Under that Copernicus program, they have launched some important satellites. They are called Sentinel, Sentinel-1, Sentinel-2. So Sentinel-1 and Sentinel-2 gives us a very high resolution of crop pictures, crop images, which are 10 meter by 10 meter and 20 meter by 20 meter. And every pixel actually, you can find out what crop is that. That is called crop signature. And this is available every 5 days for that Sentinel-2, which is optical, and every 12 days for the backscatter, means microwave data. So during the crop, say a particular crop is 120 years old, 120 days old. So you will be having at least 30 to 40 images during the entire crop life cycle. And this is available from 2016. So you know that this how the crop has fared in 2016, 2017, 2018, and 2019. And you can do some statistical analysis. And in the current year, using the same data set, you can understand how is the crop fared in the current season. So based on these, actually, we have developed a product, insurance product, and that we have launched in the state of Bengal, West Bengal, who had quit the Pradhan Mantri Fasal Bima Yojana 2 years back in 2018. And somehow I had got some connection with the state government. I could convince them that this is a innovative product, and with this product, this the local influences at the grassroots level at the time of loss assessment can be avoided, because entire data is coming from the satellite, and the data can be on a dashboard, on a real-time dashboard, can be shared with the state governments and all. So Bengal government came forward with this thing. They approved our proposal, and in Kharif 20, we have applied, we have adopted this program for the entire state. We have covered as much as 62 lakh farmers. In Rabi season also it is going on, and the results are absolutely exhilarating, very, very exciting results. The state government is very happy. We have started receiving many queries from some of the states that what is their satellite imagery, what is the state-based crop insurance program. So we are very happy about that, and probably going forward, this is the way the crop insurance has to be, has to be modulated, has to be moderated, so that we can use more and more technology, and the premium rates can come down, so that the states which have gone out of PMABY, they can join back. That is our motto. We are, as I said, that we are a public sector insurance company, specialty company, we're doing agricultural insurance. So we thought that it is our responsibility to bring in these kind of innovations in the crop insurance program, so that more and more farmers can derive benefit out of this program. So thank you very much once again for giving me this opportunity. And if there are any questions, I'll love to address this.
Thank you so much, Mr. Podar. Thank you so much for sparing your valuable time and sharing in such detail with the special focus on the agriculture sector. Now, I'm sure there's this topic of climate change, which everyone is thinking about, and of course, its effects on agriculture. The question to you is that how do you think this issue affects the agriculture insurance sector in particular? How do you deal with the sustainable issues that arise out of the problem of climate change?
Yeah, it's a serious concern, because we had experienced over the years that the climate is becoming of more of a micro nature. Sometimes we see that rains are happening, unseasonal rains are happening at a much intensified matter and getting localized in certain geographies, whereas you don't go much far, you find that the rains are not happening there. So it is all happening because of the climate change, and particularly, as you all know, South Asia is one of the most, the victim of this climate change, and particularly the Indian subcontinent. So we are experiencing, and since we are covering almost 3 crore farmers all over the country, so yes, we experience that there is a change in the climate in terms of basically moisture is the most important factor for crop growth. So at right time, right amount of rain only can give this succor to the farmers actually for this thing. And only 40% of our land is irrigated, 60% is a rain-fed crop. So climate change is a very big issue, no doubt about that. And that's why crop insurance system, agriculture insurance system has to take care of these micro level deviations also, so that we can develop innovative products to address the localized phenomenon. Yeah.
Insight address from your side. Thank you for sparing your time. And there's just so many questions that have come in for so many speakers today. We from IOD India family will try and put together these relevant questions in the magazine and also share them with the connected ministries so that they keep in mind the concerns that are coming from the board of directors. Thank you so much to Mr. Podar and to all the distinguished speakers who made time to join us for this very, very special third edition of IOD India's Directors Dialogue. Today, the special focus, of course, was on financial services and insurance sector. And it is with a deep sense of pride that I share that I think all the well-performing players in the market in these sectors were a part of this webinar that really speaks a lot about this initiative and IOD's commitment towards building the boards of tomorrow. Thank you to each one of you for joining us, and especially to our principal partners. Let me quickly thank Life Insurance Corporation of India and PolicyBazaar.com for supporting us, for inspiring us, and also our platinum partners, Agriculture Insurance Company of India Limited, SBI Life Insurance Company Limited. Our gold partners, IFCO Tokyo General Insurance Company Limited, HDFC Ergo General Insurance Company, Odisha Mining Corporation, and Union Bank of India. And our silver partners, Chola Mandalam MS General Insurance Company Limited, Universal Sompo General Insurance Company Limited, ICICI Lombard General Insurance Company, Star Health and Allied Insurance Company Limited, ECGC Limited, and Spices of India. All partners for extending their support. And before we move further, and I invite Mr. Pradeep Chaturvedi, Vice President of Institute of Directors India, for his closing remarks, let's take a look at very short videos from our partners.
Guys, कल मेरी नई बाइक आ रही है.
Great. तब तो I will come with Rohan every day.
इंश्योरेंस है. तुझे क्या लगता है? इंश्योरेंस, पीयूसी सब कुछ है. I was talking about life insurance for Sia.
Jokes apart, guys, but आज मजा कल सजा नहीं होनी चाहिए.
Yeah.
Seriously, life insurance तो जरूरी है.
LIC का न्यू जीवन आनंद देता है डबल फायदा. मैच्योरिटी पे मिले फुल पेमेंट और लाइफ कवर चले जिंदगी भर.
ए हेलो, इंश्योरेंस है क्या?
सर, आपका बिल
5 लाख 10 लाख का हेल्थ इंश्योरेंस है मेरा. बाइफरकेशन होगा.
15 लाख?
नहीं मेरा नहीं होगा. लास्ट 25 लाख. ये थर्ड क्लास हॉस्पिटल का 5 स्टार बिल.
सर, आप कैश पेमेंट करेंगे या कार्ड से?
EMI.
अब हॉस्पिटल बिल के आगे हेल्थ इंश्योरेंस कम नहीं पड़ेगा. PolicyBazaar.com पे कराओ 1 करोड़ का हेल्थ इंश्योरेंस बहुत ही कम कीमत पर.
फसल बीमा से अब सुरक्षित आत्मनिर्भर बन जाए किसान.
माटी से है उठी पुकार, अब तकदीरें बदलेंगी.
रुकेंगे न हौसले कल के अविश्वास से, अब तय किया है हमने.
नया दौर खुशहाली का ले आएंगे इस जग में AIC के संग.
मौसम की मार अब नहीं करेगी तंग. बुलंद हौसलों की मिट्टी के संग, कठिनाइयों से न डरे अब ये मन. दिख रहा है नया भरोसा.
हर खेत रोशन हो मेरा.
हवाओं के रुख से साहिल बदल रहे हैं.
पूरे देश में अब किसान
फसल बीमा करा रहे हैं.
AIC के संग मौसम की मार अब नहीं करेगी तंग. नुकसान की होगी पूरी भरपाई.
AIC किसान का हमराही.
एग्रीकल्चर इंश्योरेंस कंपनी ऑफ इंडिया लिमिटेड, संपन्न भारत की पहचान. बीमित फसल खुशहाल किसान.
पापा, योगा टाइम.
आज बच्चे भी इम्यूनिटी स्पेशलिस्ट बन गए हैं. विटामिन ABCD के एक्सपर्ट्स बन गए हैं.
पापा, डन.
क्योंकि ये सब जानते हैं कि जब हेल्थ की इम्यूनिटी बढ़ती है तो हम सुरक्षित रहते हैं.
इसी तरह हमारी फाइनेंशियल इम्यूनिटी यानी फाइनेंशियल सुरक्षा बढ़ने से हमारे अपने सुरक्षित रहते हैं।
SBI लाइफ का पूर्ण सुरक्षा प्लान जो दे लाइफ कवर और 36 क्रिटिकल इलनेस की सुरक्षा और बनाए रखे बैलेंस बढ़ती उम्र के साथ।
आप टेंशन न लो जी, गड्डी डेंट प्रूफ है। ये गोला तो ठीक है, लेकिन ये हाथ गोला गिरेगा तो? गुड जोक। ये पिन गोला गिरेगा तो? ये विनाश गोला गिरेगा तो? गिरना तो नहीं चाहिए। नमस्कार भाऊ। नमस्कार। अभी कार लेते समय इतने सवाल पूछते हो, कार का इंश्योरेंस लेते टाइम पूछता है कितने कैशलेस गैरेजेस है, ओवरनाइट रिपेयर सर्विस है, क्लेम सेटलमेंट रेट क्या है, पूछता है। अगर पूछोगे तो मिलेगा सही जवाब HDFCR को। अभी कार इंश्योरेंस का हो सवाल तो HDFCR को है सही जवाब।
एक बार आके देख लो, कहीं मैंने कोई गड़बड़ तो नहीं कर दी।
सिर्फ मेरा नाम क्यों?
अरे जिसने घर खरीदा है उसी का नाम होना चाहिए ना।
और फ्रेंड्स क्या कहेंगे?
कहेंगे कि काश अपनी बीवी भी ऐसी होती।
पिछले 100 सालों से ऐसी हर अच्छी शुरुआत का साथ दे रहे हैं हम, यूनियन बैंक ऑफ इंडिया।
My journey of insurance and investments began at the same time when I invested in LIC SEEP. In this fast-moving world, SEEP can balance your funds with security and growth. SEEP will take care of the ups and downs of the market and will give you fruitful results so that you enjoy the ride. And when SEEP is with you, you can soar high.
LIC's unit-linked insurance plan SEEP offers savings and protection so that you can soar high in your life. LIC, हर पल आपके साथ।
In May 2000, the world saw two giants coming together. IFCO Limited, world's largest processed fertilizer cooperative, and Tokyo Marine Holdings, a global insurance provider, came together to form a joint venture company in India to provide general insurance to all. An MOU between the two great companies was signed. On 4 December 2000, the company received the IRDAI license and the seed sworn germinated into IFCO Tokyo General Insurance Company Limited. We started our operations with mission to provide insurance to individuals, corporates, cooperative, multinationals and others who were uninsured. And the rest is history.
So those were the special videos courtesy of Principal, Platinum, Gold and Silver partners. Once again, a big, big thank you to all of them, because without them, this global webinar wouldn't have been possible. A big thank you to each one of you who joined us from different parts of the world. It's been quite an enriching experience, and I hope that you enjoyed and it enriched you as much as it did to me. And now, finally, I'll take your leave. This is your host, Ritika Jhanji, signing off for the evening, but I would leave it to Mr. Pradeep Chaturvedi, who is the Vice President of Institute of Directors, India, to please present the closing remarks. Over to you, Mr. Pradeep.
It's a great pleasure for me to make my remarks at the end of the webinar, which was a very successful webinar. The Institute of Directors had specially designed dialogues with the directors from different industries, but we just went sector-wise, and this is how we went into presently the third in the series on financial and insurance sector. It is the way these are being done by our events team, being planned in such a nice manner, where we have the topmost of the policy makers who made the government's policies, announcements, details, explanations. I must especially thank Dr. Untitled Chapter, Secretary, Department of Commerce, Mr. Devashish Panda, Secretary, Department of Financial Services, Mr. Tuhin Kant Pandey, Secretary, Department of Investment and Public Asset Management. They presented the overall government's picture on financing the inclusive growth, the creating a system, creating ease of business, facilitating foreign investments, especially in terms of insurance funds, pension funds, and all such things how they can really come and help in terms of our growth. I mean, this was a wonderful opportunity for everyone to learn from them, and the Institute of Directors wishes to thank all the three of them for their great contribution for starting this program. We also had two keynote addresses by Mr. Vipin Anand of the Life Insurance Corporation, highlighting how they are moving on to the corporate governance, realizing that in spite of being a government company, it is better to move on and align themselves with the company's act, and then see how the corporate governance will bring in better results for them. And Mr. Yashish Daya as to how the middle income group could really be brought on with the policies that we are having. I mean, these were wonderful presentations that we had, and we thank both of them for their presentations. To Mr. Shailesh Haribhakti, who is the chairman of our Mumbai region, and who did a wonderful job of interacting on different topics with the three secretaries as well as with the other speakers. We also had the 4 important programs from keynote addresses. Mr. Ravi Krishnamurthy, the president of the SBI Life Insurance, then Mr. Sharad Mathur, managing director and CEO, Mr. S. Prakash, managing director, Star Health, and Mr. M.K. Poddar, chairman, managing director, who gave an overall picture of how those industries are working, how the new technologies have come in, the digitization and digitalization have brought in the kind of change that is being working, and how the corporate governance will really be playing an important role. The Institute of Directors is happy that we are able to bring on the same platform directors from so many diverse sectors and from diverse industries from the same sector of the financial and the insurance, and then maybe we'll be able to move on from here. I must also thank once again our sponsors who made this whole event possible, the principal partners, Life Insurance Corporation of India and the PolicyBazaar.com, the platinum partners, the Agriculture Insurance Company of India Limited and the SBI Life Insurance Company Limited, the gold partners, IFCO Tokyo General Insurance Company Limited, HDFC Ergo General Insurance Company Limited, Odisha Mining Corporation Limited, and the Union Bank of India. And our silver partners, Cholamandalam MS General Insurance Company Limited, Universal Sompo General Insurance Company Limited, ICICI Lombard General Insurance Company, Star Health and Allied Insurance Company Limited, Export Credit Guarantee Corporation of India, and Spice Board of India. And before I close, I must pay compliments and really say that how hard our events team, Mr. Ashok Kapoor, Mr. Manoj Raut, Sushil Kapoor, Shivika, Mr. Rakesh, and supported by Ravi, did a wonderful job to bring such a nice program to the global community. And thank you very much for being here. See you later.
मेरे पास तो कई लाइव्स हैं, मुझे लाइफ इंश्योरेंस की क्या जरूरत, लेकिन आपके पास तो एक ही लाइफ है। अपनी फैमिली को सिक्योर कीजिए LIC के साथ। LIC, जिंदगी के साथ भी, जिंदगी के बाद भी।
सर, आपका बिल
5 लाख 10 लाख का हेल्थ इंश्योरेंस है मेरा, बाइफरकेशन होगा।
15 लाख
नहीं मेरा नहीं होगा। लास्ट 25 लाख। ये 25 लाख, ये 3rd क्लास हॉस्पिटल का 5 स्टार बिल।
सर आप कैश पेमेंट करेंगे या कार्ड से?
EMI।
अब हॉस्पिटल बिल के आगे हेल्थ इंश्योरेंस कम नहीं पड़ेगा। PolicyBazaar.com पे कराओ 1 करोड़ का हेल्थ इंश्योरेंस बहुत ही कम कीमत पर।
फसल बीमा से अब सुरक्षित आत्मनिर्भर बन जाए किसान।
माटी से है उठी पुकार, अब तकदीरें बदलेंगी।
रुकेंगे न हौसले कल के अविश्वास से, अब तय किया है हमने।
नया दौर खुशहाली का ले आएंगे इस जग में AIC के संग।
मौसम की मार अब नहीं करेगी तंग, बुलंद हौसलों की मिट्टी के संग, कठिनाइयों से न डरे अब ये मन, दिख रहा है नया भरोसा।
हर खेत रोशन हो मेरा।
हवाओं के रुख से साहिल बदल रहे हैं।
पूरे देश में अब किसान
फसल बीमा करा रहे हैं।
AIC के संग, मौसम की मार अब नहीं करेगी तंग, नुकसान की होगी पूरी भरपाई।
AIC किसान का हमराही।
एग्रीकल्चर इंश्योरेंस कंपनी ऑफ इंडिया लिमिटेड, संपन्न भारत की पहचान, बीमित फसल खुशहाल किसान।
पापा योगा टाइम।
आज बच्चे भी इम्यूनिटी स्पेशलिस्ट बन गए हैं, विटामिन ABCD के एक्सपर्ट्स बन गए हैं।
पापा डन।
क्योंकि ये सब जानते हैं कि जब हेल्थ की इम्यूनिटी बढ़ती है तो हम सुरक्षित रहते हैं। इसी तरह हमारी फाइनेंशियल इम्यूनिटी यानी फाइनेंशियल सुरक्षा बढ़ने से हमारे अपने सुरक्षित रहते हैं।
SBI लाइफ का पूर्ण सुरक्षा प्लान जो दे लाइफ कवर और 36 क्रिटिकल इलनेस की सुरक्षा और बनाए रखे बैलेंस बढ़ती उम्र के साथ।
आप टेंशन न लो जी, गड्डी डेंट प्रूफ है।
ये गोला तो ठीक है, लेकिन ये हाथ गोला गिरेगा तो?
गुड जोक।
ये पिन गोला गिरेगा तो? ये विनाश गोला गिरेगा तो?
गिरना तो नहीं चाहिए।
नमस्कार भाऊ। नमस्कार। अभी कार लेते समय इतने सवाल पूछते हो, कार का इंश्योरेंस लेते टाइम पूछता है कितने कैशलेस गैरेजेस है, ओवरनाइट रिपेयर सर्विस है, क्लेम सेटलमेंट रेट क्या है, पूछता है? अगर पूछोगे तो मिलेगा सही जवाब HDFC को। अभी कार इंश्योरेंस का हो सवाल तो HDFC को है सही जवाब।
एक बार आके देख लो, कहीं मैंने कोई गड़बड़ तो नहीं कर दी।
सिर्फ मेरा नाम क्यों?
अरे जिसने घर खरीदा है उसी का नाम होना चाहिए ना।
और फ्रेंड्स क्या कहेंगे?
कहेंगे कि काश अपनी बीवी भी ऐसी होती।
पिछले 100 सालों से ऐसी हर अच्छी शुरुआत का साथ दे रहे हैं हम, यूनियन बैंक ऑफ इंडिया।
हेलो अतुल।
हाय माँ, यहाँ रात हो रही है माँ।
सॉरी बेटा, बहुत याद आ रही थी। ओके बाय 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 बाय।
माय पेरेंट्स, मेरे लिए ना कॉलेज चुना ना सब्जेक्ट्स, बट उनका प्लान था बहुत ही स्पेशल, जिससे बन गया मेरा फ्यूचर।
LIC का न्यू चिल्ड्रंस मनी बैक प्लान जो आपके बच्चों का फ्यूचर करे प्रोटेक्ट हर जरूरी मोड़ पर।
इट्स अ फ्यूचर बिल्डिंग प्लान।
In May 2000, the world saw two giants coming together. IFFCO Limited, world's largest processed fertilizer cooperative, and Tokyo Marine Holdings, a global insurance provider, came together to form a joint venture company in India to provide general insurance to all. An MOU between the two great companies was signed. On 4 December 2000, the company received the IRDAI license and the seed sworn germinated into IFFCO Tokyo General Insurance Company Limited. We started our operations with mission to provide insurance to individuals, corporates, cooperative, multinationals and others who were uninsured. And the rest is history.